is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved a soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Mr. Barr returning Lions this weekend. Sweeney's still on assignment. In today, 3 days of David Gura. It was too much. I said, give me someone with style. Joining us, the Don Johnson of Bloomberg LP, Damian Sassower.
There we go.
With us. Look at Lisa, tanned and rested. I mean, what were you, house shopping in Coral Gables?
We weren't in Coral Gables. We were on South Beach this time. We were on Collins. We stayed at the
You
Sonesta.
stayed at the Betsy?
The Nautilus Sonesta.
Did you have a beverage at the Betsy?
I didn't. I didn't have a lot of time. I was at the Crepsy. I was at Lisa Pendergast, a friend of this very show, the Commercial Real Estate Finance Council. This is their annual confab. And let me tell you, I learned an awful lot. Data centers, logistics, office, retail, multifamily. Let's talk about the U.S. housing market.
We're going to do an audible here. Joining us now, a woman from Florida, Cam Dawson. Cam, when some moron like Damian says, I was in South Beach, what does an actual adult from Florida think?
Go north.
And we'll leave it there. Cam Dawson says, go north if you're in Miami. Good morning, Michael McGlone and others down in with Bloomberg.
Michael McGlone.
Miami. We got an incredible day today. This hasn't been mentioned all morning. Luxury stocks launch this morning off of Richemont of Switzerland. My head is spinning. Cartier with blowout numbers.
Beautiful.
The world's coming to an end.
Holiday
China's going to die. And Richemont came out and said, no.
No, and by the way, we have a pretty big retail sales print coming up at 8:30 today, I believe. So, I mean, if the holiday shopping season for Richemont and Cartier, and by default the U.S. It's going to be a good number.
Stay with us across the nation on YouTube as well. We start talking Ken Leon on the banks here in a moment. Cameron Dawson in a moment on the bull market lift we saw yesterday from the Interactive Broker Studios, the Bloomberg Business Flash. Lisa Mateo.
And we've got futures mixed this morning, and this is after yesterday's rally. You know, that followed that cooling inflation data, increased rate cut bets, but also strong bank earnings that really set the tone for the season. And we have banks starting this morning. We'll head with Bank of America. That's what we'll start with. Net interest income for the fourth quarter beat estimates at shares. Right now, they're up about 1.5%. This morning, we also heard from PNC Financial. Their shares, though, down 0.2%. Forecasts net interest income growth for 2025 of plus 6% to plus 7%. We're still awaiting results, though, from Morgan Stanley and U.S. Bancorp. So let's get to futures. We'll start with NASDAQ futures up 0.3%, 82 points. Dow futures down 0.2%, 85 points. And S&P futures up 0.2% or 11 points. The two-year yield at 4.28%, up 2 basis points. The yield on the 10-year 4.66%, and that's up 1 basis point. To currencies, we have the Bloomberg Dollar Spot Index up about 0.1%. Shares of chip equipment companies, they're getting a boost. That's thanks to an upbeat outlook from Taiwan semiconductor manufacturing. They're up about 3% in Taiwan, and that really sparked some hopes for strong AI spending. So you have shares of Applied Materials up 3%, and ASML Holding, their ADRs up 4%. That is your Bloomberg Business Flash. Damian and Tom.
Lisa Mateo, thanks so much. Damian Sassower in for Paul Sweeney. I'm Tom Keene, and perfectly timed. We really wanted to start with the renewed bull market. Futures 6,000 on the SPX. Cameron Dawson briefs from NewEdge. I think a lot of our listeners know the Cameron Dawson line. What has changed for you in the last 48, 72 hours with a reaffirmation of equities?
I think that what got reaffirmed is that we are still very much in an uptrend. What got taken out or changed in the last 24 hours is the risk that the Fed would be hiking rates at some point in 25 or 26. The 2-year Treasury yield got to 4.4%, which is just slightly below where Fed funds is right now. That meant that you were pricing in some risk that we could get to hikes.
I want to talk about the ambiguity out there. It's a microeconomic concept, folks, which is yields go up, OMG, that's bad for stocks. And I've had a number of sophisticated guests like you say maybe not. Yields a bit higher, there's a bit more inflation, nominal GDP is better, and revenues come in sprightly, like Delta, 4 out of 8 banks, whatever. Cartier in Switzerland. I mean, is this a revenue miss that we're going into in this quarter?
TSMC, Rio.
Well, I do think that we need to make a distinction between what's going on with European luxury and what could happen within U.S. consumer stocks, because European luxury is benefiting from a weak euro and a strong dollar. If we see U.S. consumer stocks potentially coming out saying, hey, the dollar's really strong, it's weighing on some demand or weighing on our revenues, that could be a headwind. We do think at the end of the day, inflation is good for earnings, because inflation allows you to have pricing power, it gives you revenue upside, it gives you operating leverage. So we do think that having a little inflation in the system is one of the reasons why earnings have been so strong.
Cam, it's only January 16th, so forgive me for the baseball reference. Pitchers and catchers don't report until February 11th, but here's my question for you. What inning are we in? I mean, seriously, I can hear people make a case that we're early stage, that we're late stage. Where are we in the business cycle right now?
We've been thinking that we lean more towards late cycle because of your long cyclical indicators, like where construction spending is. If you were early cycle, that would not be at peaks. But if we think about where we are from a pricing standpoint, we do have to appreciate that we're going into this year at a much higher valuation than we did the last 2 years. And we think the biggest question for 2025 is whether or not the 2020 peak valuation of about 23 times earnings acts as a ceiling, or if it's just another step along the way to this huge multiple expansion that we've seen the last 2 years.
You know, Cam, let me build on this a little bit. I was looking at U.S. real yields, right? And I was looking at the 2-year versus the 10-year. I was trying to decompose them. And they're telling me two different things. If you look at the move in yields, in nominal yields, much of it can be explained by inflation break-evens going up, at least in the front end. But if you look out to the 10-year, it's a move in real yields and growth expectations. So, you know, I'm trying to kind of reconcile the two. What are your thoughts there?
Yeah, and we also have to add in these fiscal concerns, the potential questions around how are you going to fund the fiscal deficit, given the fact that we're hearing from Besant today. We know that bills as a percentage of Treasury issuance or Treasuries outstanding is now at 20% or over 20%. That's more than what TBAC, the Treasury Borrowing Authority, recommends, which just suggests that that is a huge question for how Besant is going to navigate these big deficits. Do we see them do more coupon issuance? Does that cause long yields to go up?
Right.
Big questions.
Kim, I want you to, you're so visible and enthusiastic about the American experiment. I want you to talk about a gloom crew quieted again, like go to cash, and then I got to figure out how to get back into the market once I'm in cash. What's your take on that?
We do think that you should always see volatility as opportunity. And it's a mindset shift that means that when
Nicely said, yeah.
When you see volatility, it's very easy for fear to kick back in. And that's when you get frozen, you get that arrested development. So we think if you judge us as advisors, our success is when clients call us when there is volatility and say, what should I buy? Versus saying, get me out of this, I want to sell.
This is so, Damian, I can't say enough. I mean, you're on the beach in Miami, you don't care. I'm inundated on the street, in restaurants, my email, semaphore. I'm inundated with people saying, I'm afraid to participate.
Well, I'm going to challenge Brooks Ritchie in a little bit of behavioral finance here, because for me, as we get into January, it's all about positioning. It's all about sentiment, right? And so talk to me about financial conditions. I mean, what is it going to take to knock U.S. financial conditions back again? Just a little bit. I mean, is it going to be, you know, equities coming off here or spreads? I mean, how tight can spreads go? I mean, talk to us about financial conditions. What are your expectations there?
Isn't it fascinating? So the four main components of financial conditions being yields, currencies, equity prices, and credit spreads. Yields and currencies have all tightened, but because equities and credit spreads have remained so resilient, you haven't seen a tightening in financial conditions, which means we think that financial markets are effectively saying, Fed, you're not that tight. If the Fed was that tight, credit spreads would not be at 20-year tights. If the Fed was really weighing on economic activity in a significant way, you would not see high yield spreads where they are.
What's your call on the market now? I mean, people, the whiplash the last 2 weeks has been, we're deep into 2025. I mean, what's your call on the market this year?
Respect the trend, but do not ignore the risks. Our call for 2025 is a wide, choppy range.
Okay, we got to run because I got to do bank earnings. You want to do bank earnings with us?
Yeah, do bank earnings. Morgan Stanley, B of A. We'll talk about net interest margins. Come on.
Ken Leon joins us now.
Underwriting.
This is really, I'm honored by this senior analyst, CFRA, with decades of experience. Ken, my basic take, and my audience has heard this from me, the banks are literally sandbagging how much money they're making. They are profit machines. Let's start with a why. Why are these big banks profit machines?
The banks have a much stronger business model today, Tom, than what we spoke about maybe 3, 5, or 10 years ago. They have a blend of great franchises with durable recurring revenue, fees for transactions across many businesses. And then on the upcycle for investing, or really for investment banking, we're seeing the added benefits. So it's almost like putting fuel on the fire, and that's the story for 2025.
Is there a monopolistic tendency here? Is there concentration of revenue and particularly concentration of profits so great that you are concerned?
Well, we're not concerned, but investors have to be aware so that when you're investing in the overall market or the financial sector, the 5 global U.S. banks are top 10 constituents. And when we look at these banks, they're gaining wallet share across different businesses. So the answer is yes. Consumer, investment banking, taking wallet share from Europe. Across most businesses, they have dominant positions, but that's a strength for America.
Ken, I'm sitting here next to Gam Dawson, and she's dying to ask you this question. I mean, bankers are claiming that there's just this enormous appetite for capital at current levels. I mean, we saw a surge in profitability, not just JP, not just Goldman, but Wells and Citi as well yesterday.
Even Wells Fargo.
Yeah, I mean, everyone is making money in this market, Ken. Talk to us about B of A and Morgan Stanley. What are you focused on here?
So we took a look at the numbers for Bank of America. They're slightly better than JP Morgan. Loan deposit growth, 3% for both. Net interest income, 3%. In the areas of global banking, very strong across all areas. I think any of these managements want to understate their book or outlook, mostly because it's still early.
This is my big theory. Cameron Dawson with us. We're doing this differently this time. To have Cam Dawson looking at the holistic market and Ken Leon with terrific granularity is really what surveillance is about. Cam Dawson, you're listening to this. Is this a year where you look at Ken Leon's work and say it's a sector acquisition, or do you buy individual securities?
Yeah, I mean, we think the financials are set up for success. You have a strong economy, you have a steeper yield curve, you have the potential for regulatory improvement, and you have the potential for a return to business activity and M&A and IPOs. These are all important tailwinds. Just don't forget, the banks are now not that cheap. They're trading at 1.5 times book, which is effectively the peak.
Ken, do you agree? Ken Leon, are they rich?
Yeah, so in November, we put the report out, Stay the Course for 2025. And what strategists don't know is sometimes you can earn into your valuation or higher. So we're going to see upward earnings estimates for the consensus through all of this year. We're overweight the financial sector along with technology and communication services.
Ken, my son was just on the Morgan Stanley sophomore internship last night, and you know what? It's not about net interest margins. It's about wealth management. Talk to us about the $7.3 billion beast. I mean, talk to us about wealth management at Morgan Stanley Q4. I mean, it's got to have been great, right? Not lights out.
It never has these enormous jumps in terms of growth, but they're just steady performers. What they do is they create the story for durable recurring revenue, fee services. And that's good because it's enabled Morgan Stanley in the last year or so to get a higher multiple, getting closer to a BlackRock. So it is a blend with that strong franchise in wealth management. Goldman's coming up for different reasons, which is private equity and private capital will be their new secular growth areas.
I said this the other day, I think maybe it was yesterday, that BlackRock now is even beginning to be folded into the major bank analysis with the success that we've seen. We welcome all of you across the nation on your commute on Apple CarPlay, Android Auto. Good morning, 99.1 FM in Washington. Big events down there. We're going to go to Ethan Bronner in Tel Aviv here in a bit. Good morning, 92.9 FM Boston. Our flagship, Bloomberg 1130 in New York. Good morning. And a first mention this morning, YouTube Humbled by the attendance. Thank you so much. Subscribe to Bloomberg Podcasts. Ken Leon with us with CFRA and Cam Dawson sitting in as well with NewEdge Wealth. Damian?
Yeah, Ken, I mean, look, when I look at the bank of earnings and I try to break in and see what's going on underneath the surface, I look at debt underwriting because that gives me a pretty decent lead on commercial real estate. You know, and we know what the commercial real estate market has looked like, and we know what it looks like right now. There's a lot of debt out there where, borrowers are paying 4%, and they're going to have to adjust to an environment where they're paying 8-9% now. Talk to us about that hurdle. How do they get there, and how are the banks helping them get there?
Right. So for any of the large banks, they mostly have exposure to multifamily, which is more stable.
Yep.
Commercial real estate is mostly offices at risk. We see it as kind of idiosyncratic for this year and to 2026, which means no big reserves. They already took them. Additionally, the areas to still lend is areas like data centers for AI.
Yep.
On a global basis. And overall, when we look at real estate, we're also seeing some deep values. So firms like Blackstone and KKR and others, we'll take a look at it. Brookfield's another one.
Well, Ken, I mean, I'm dying to hear you talk a little bit more about these data centers. My read on it is that the building of data centers accounts for easily 1% of GDP here in the U.S. I mean, Cam, what are your thoughts about, that kind of convergence of, Mag 7 tech and the real estate sector? I mean, talk to us a little bit about what that means for the U.S. economy.
Yeah, Neil Dutta put out a really interesting note yesterday talking about how he thinks it's about a 0.5 percentage point in the last year that tech has contributed, and that you've seen a slowdown in the permits or the initial kind of plans, which is a question of how long can it last.
I got one more question. Ken Leon, to what Damian was talking about there, I think is an important frame. With your research capabilities at CFRA, does Mag 7 expand this year with data center build-outs, with the oomph, the productivity oomph of the American economy? Are we naive in a branded idea of just 7 stocks?
Well, it may not be 7 stocks. Certainly there's some enormous companies that are just below that mark. It's a very concentrated market. It does put a little bit higher risk on equities. If you want to be defensive, of course, Cameron could talk about an equal weighted S&P 500 or the S&P Dividend Aristocrats. But overall, it's the market we're in.
Cameron, I got 22 seconds. Equal weight. It's all the rage now, isn't it? I mean, every other page of Barron's, equal weight. What do you think?
Be careful. Equal weight earnings have grown 9% in the last 2 years. Mag 7 earnings have grown 125%.
This is why Cam Dawson's on, folks. She's got the details. Say that one more time. It's too important.
In the last 2 years, equal weight earnings are up 9%. Mag 7 earnings are up 125%. No wonder it's a concentrated
market. The only
market.
one I know on the street that can do that is Sam Stovall. Ken Leon at CFRA, thank you so much for joining us today. Cam Dawson, thank you as well, particularly for the acuity there. Speaking of acuity, back for the NFL weekend with our news in New York City, Michael Barr.
Thank you very much, Tom, Damian, Lisa. Israel says Hamas has reneged on parts of the Gaza ceasefire and hostage release deal that was already agreed upon. Israeli Prime Minister Benjamin Netanyahu's office said that is creating a last-minute crisis that prevents the completion of the accord. Netanyahu's office adds the Israeli cabinet will not convene to approve the deal until the mediators notify Israel that Hamas has accepted all elements of the agreement. President Joe Biden delivered his farewell address to the American people last night from the Oval Office. The president wished the incoming Trump administration success. Biden also listed his concerns for the country, including what he called the tech industrial complex.
Today, an oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy, our basic rights and freedoms, and a fair shot for everyone to get ahead.
Biden also called for a constitutional amendment to end immunity for sitting presidents. The U.S. Federal Trade Commission and 2 states sued tractor giant Deere, alleging the company illegally monopolized agricultural equipment repairs. The FTC and state attorneys general from Illinois and Minnesota filed a complaint in federal court in Chicago saying the tractor manufacturer withheld key information and diagnostic tools from farmers and independent repair shops. FTC Chair Lena Khan spoke to Bloomberg.
They've been steered into Deere's network of authorized dealers, which practically means they're paying more. And especially for farmers that live in rural areas, it means they sometimes have to drive hours to even get to the nearest dealer.
The FTC voted 3-2 to file the complaint, with both of the commission's Republicans voting against it. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, Lisa.
Yeah, Lisa, help me here. I mean, Barr's had a tantrum this morning, said, I'm not coming back unless you lead with the Lions. The Commanders, Damian, versus the Lions?
Yep, that's right.
I mean, a surprise to say the least.
I mean, Jaden Daniels has been this could be the best rookie season of any NFL player in the history of the game. I mean, truthfully, but let's
better
be clear.
Than Flutie?
Well, I think what's going to be interesting here, though, Tom, I have to tell you, is Aaron Glenn, the defensive coordinator for the Detroit Lions, is interviewing with the New York Jets for their head coaching spot.
Shh,
and so
we're running out of time.
Michael,
we're running.
Share
out of
the
time.
love, Michael. Share the love.
Thank you. But that's what they do. They steal the people that run the game from the best teams, don't they?
Yeah.
Michael Barr, thank you for that. We'll get some more Barr analysis here in a moment. Please stay with us. Morgan Stanley coming up in 9 minutes.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we have a bit of a shift to yesterday's rally after U.S. core inflation marked the first step down in 6 months. Increase those bets that the Fed will lower interest rates further this year. In fact, swap traders back to fully pricing in a Fed rate reduction by July. Today, we move on to retail sales, import prices, the weekly report on initial jobless claims. That comes out in about an hour from now. We'll start with NASDAQ futures up 0.2%, 62 points. Dow futures down 0.2%, 85 points. S&P futures up 0.1%, or 7 points. We have the 2-year yield at 4.29%, up 3 basis points. The yield on the 10-year, 4.67%, and that's up 2 basis points. The Bloomberg Dollar Spot Index up about 0.1%. We have shares of United Health Group. They're down more than 2%. Now, here's the thing. It reported fourth quarter profit that topped expectations, but high healthcare costs in the fourth quarter, well, that forced it to leave the 2025 guidance that it was issued 6 weeks ago unchanged. Now we move to Target, up about 0.5%. It raised its sales guidance following a better than expected holiday season. And from Target, we go to luxury retail. Tom, you talked about this. Shares of Richemont up 16% in Switzerland.
Yeah.
A jump in jewelry sales, but here's the thing, it's also pushing up shares of Dior, up 8% in Paris, just about the same for Kering and also for LVMH. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Damian, Tom.
Lisa, thanks so much for that. We really try to tie all this together, and we have someone so qualified to speak on this. Virginia Mazenouv is Global CIO Equity at Allianz, but far more than a student of our gloom. And she is pushed against what I'm going to call capitalistic gloom for a wonderful short career. I'm going to dazzle her right now by saying, Virginie, la rue de Faubourg Saint-Honoré et on voit de 8 arrondissements de Paris qui le traverse. How am I doing, Virginie? Did I nail that?
That's pretty good. Pretty good.
Well,
I can. You've trained well.
Well, I've trained well to look at the Bloomberg, and the Bloomberg tells me Delta did a great job. The American banks are doing a great job. If you sit there on Faubourg Saint-Honoré, you look at, as Lisa mentioned, a Cartier doing better than good for Richemont. Do we underestimate globally, Virginie, the productivity enhancement we're seeing in 2025?
Yeah, so I think, there's several parts to that. So if we talk about luxury in particular, that was a bit of a surprise after Bloom, Chinese demand, and generally the post-COVID, period. And I think, there is room for more upside there, but clearly in luxury, we're going to have to see what the tariffs looks like with the new administration. If you're talking about productivity enhancement in general, I do think that with the digital Darwinism and the AI, artificial intelligence, permeating, if you want, all the sectors, we will be able to reap some benefits in terms of productivity growth. And some believe about 2.5%, as much as that, between now and 2030.
Virginia, let me bring in my colleague Damian Sassower here with me this morning. Damian to Virginia.
So, Virginia, I've been reading about your global markets outlook, and you're positive on global equities. And I want to be clear here, global equities, not U.S. equities, which I find interesting, right? Considering Asian equities are off nearly 2.5% year to date. And I mean, that goes the same for EM equities and on and on. So talk to us a little bit about your expectations for the equity market outside of the U.S.
Yeah, so I think, this is a year where you're going to have volatility. We have new administrations. We have a lot of new things that are coming, some positive ceasefires, some perhaps less positive tariffs. We have potentially a new paradigm for inflation as we move into this new phase. And I think in this environment where we are still cutting rate, that is quite supportive for equities overall. However, one of the key points is going to be to anchor portfolio and possibly, especially in geographic diversification. The reason is that we have very strong or stronger earnings growth in the US, but we also have markets that are quite, sectors in the US that are quite rich versus other areas of the world that are very cheap. So if you take Europe at 40% discount to the US. So that's what I mean. Overall, you want to stay invested, but you have to be anchoring your portfolio and pay a lot of attention to margins at the stock level, because it's going to be alpha rather than beta.
This is the thing. While you're on the beach, and
sure,
Damian,
that's me on the beach.
While Virginia and I are working.
You guys are working.
And what I'm hearing here, guest after guest, is individual analysis matters this year versus the index game.
Virginia, I want to stick up with the theme of Asian equities, and why it's interesting to me as an emerging market fixed income player is this. Yields in Korea, in China are at all-time lows relative to the U.S., right? So the market is actually paying you to take currency risk in some of these markets in China, in South Korea, in Taiwan, right? So talk to us a little bit about how you would play, some of the bigger, some of the bigger companies out there like TSMC. I mean, we saw what happened overnight. Talk to us a little bit about Asian equities in the current environment.
Okay, so in Asia, first, it's not Asia overall. You have really India, China, Japan, Taiwan. I mean, they're all under very different or somehow different dynamics, right? So if you take Taiwan, end-to-end global supply chain for AI, we know that this is, the growth of AI, as we've just discussed, will continue. It's a very important part, and technology will continue to be very important. India is the new China. India is today where China was 30 years ago. Think about the demographic dividend. Think about consumption. Think about all of this. Now, of course, the model in India is slightly different than China, government, leadership, etc. But you can see from an economic standpoint, you want to have exposure to India. China is very cheap. And then you have the global supply chain redesign beneficiaries, such as your Vietnam, your Malaysia, where as China has moved part of its production facility in those countries to sort of avoid some of the tariffs, those economies have been really benefiting. So I think, and then finally, Japan, of course, Japan technology, strategic partner in terms of this new phase of geopolitics, etc. So a lot of good companies to buy in Asia.
But Virginia, I'm looking at the Indian currency, rather, USD INR. I'm only doing this, Virginia, to impress Damian. And the answer is I've got no Indian currency strength. What does the government of India have to do? And folks, Mamit Singh just dying, the guy that turned it around for his nation, we've just lost him. Virginia, what does the Indian government need to do to give the currency modest stability like 2004-05?
Yes, so I think India, clearly you have the deficits and you have, of course, the oil bill. That is very important for India. In terms of how you think about the oil price, I believe that the oil price will most likely come down. You know, if you take ceasefires, if you take the policy of the US to drill more, that will help India and will help with the stability of the currency. And of course, you have to look at your investment, including the currency, but look also at the growth pickup that you can get in India.
Virginia, at the beginning of the interview, was my French okay?
Yes, it was. Boulevard Saint-Honoré, it was very good. I could really, I understood it.
Merci, madame. I'm trying. Folks, I am the ugly American.
Oh, my God.
And I am determined to speak 6 languages like Lisa Mateo. Virginia Mazanou, thank you so much. Greatly appreciated with Allianz. Well, I guess in a matter of minutes, and you know, let me look here. MS Equities CN. I don't have Morgan Stanley out yet. Gorman would have had the earnings out now.
Yeah, I know.
What are you looking for from the shop?
That's all wealth management for me. I mean, look, don't get me wrong. I mean, they've fallen back in terms of some of the advisory and banking. I mean, I think JP Morgan's been eating everyone's lunch in this market. But, you know, I'm really focused on wealth management. Right. That's what Morgan Stanley's become. I mean, it should have been a good fourth quarter from that perspective.
If they have wealth management, does that mean they can migrate to some form of retail presentation of private credit? Is the vogue of this year?
You know, private credit is really, really interesting because I think it's now a matter of there's plenty of cash on the sidelines for it. It's now about finding good deals. And, you know, if like you said, if there's going to be really
there's
a focus.
Too much cash and not enough private
supply.
Credit.
Exactly. Not enough good companies. Let's put it that
what
way.
Happens
and now there's
when
a
that
lot.
Occurs?
You
and I have studied this.
You and I have studied what happens when that occurs. They start funding bad opportunities. And so, I mean, that is the risk here. But, you know, you see credit card delinquencies going, oh, here comes Morgan Stanley. Here we go.
You want to wealth management,
get Allison Williams in here.
Beat as well, and equities, sales and trading, a nice beat there. Looks like equity
revenue big beat.
Showed up. They're going to get paid in February.
Wow.
Compensation expenses. Now they went the other way. Many other people had compensation expenses higher than expected. An estimate is 6.6 gazillion, and they came in just under 6 gazillion, which is interesting. The stock up $2, making almost $3 here on the initial launch. These are sparse set of headlines. Every company has a different sequence of headlines, folks. What we're going to do is we're going to digest the Morgan Stanley headlines here, and we're going to come back to you across the nation and on YouTube. Again, subscribe to Bloomberg Podcast. People say, how can we help you keep this platform going? Subscribe to Bloomberg Podcast, the best way to help Damian Sassower forward. We'll come back and study Morgan Stanley from New York City. This is Bloomberg Surveillance. Stay with us nationwide.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures mix, and this is after yesterday's rally. That was thanks to signs inflation is slowing And of course, better than forecast bank earnings. Speaking of which, let's get to more this morning. Morgan Stanley just opening his books. Looks like it's a beat for the fourth quarter net revenue. Its shares right now, they are up about 1.5%, more than 1.5%. We go to Bank of America. Those shares, well, they're down about 0.6%. Reported net interest income for Q4 that beat estimates. Let's get to futures right now. NASDAQ futures up 0.3%, 67 points. Dow futures down 0.2%, 85 points. And S&P futures up 0.1% or 8 points. The 2-year yield at 4.29%, that's up 3 basis points. And the yield on the 10-year, 4.67%, and that's up 2 basis points. We'll get to the Bloomberg Dollar Spot Index up 0.2%. Few companies making news. We'll start with HBSC. Sources saying it's expected to reduce bonuses for some employees. It's part of this cost-cutting effort. And reducing costs also in the mind over at BP. In an email to employees, its CEO said it's cutting 4,700 positions internally and 3,000 contractor jobs. And finally, some leadership change news. Hindenburg founder Nate Anderson said he's leaving the short-selling firm, plans to publicly share its model. That is your Bloomberg Business Flash. Damian and Tom.
Thanks so much, Lisa. I really appreciate that. Thank God for Andrew Dunn over at Top Live. Max Abelson's all over. Max is slacking off today, but Max came to my rescue here. The 4 pillars for Mr. Pick are strategy, culture, financial strength, and growth. Here to translate the McKinsey speak, Damian Sassower.
I'll give you 2 numbers. 7.9 trillion. That's total client assets at Morgan Stanley. That's wealth and investment management. That's the number that matters. And then listen to this one: $16.2 billion net revenue for the fourth quarter of last year. That's a pretty big number. And then you've got beats all the way around. Investment banking, trading.
Financial strength, is that Fortress Pick?
Look, it was a great fourth quarter. We all expected this. Everyone's beating, but I mean, these are huge beats.
Yeah.
I mean, just big numbers.
And to be fair, folks, this is important. Bank of America and Morgan Stanley lifted with the others 24 hours ago, so their performance here this morning is actually pretty good. Cy, where are we on Morgan Stanley right now? Are they up? I didn't.
Strategy, culture, financial strength, and growth.
They're looking. It's
4 pillars.
He's on the phone with his broker. He's buying Indian rupee after what Virginia Massive said. They're up a couple percent. Right now, we're going to do a wonderful audible here. MoffettNathanson is with us, so we are going to talk about the American economy. But he came bearing gifts. This will go to Lisa Mateo. It says on the back it's gluten-free. This is Elm Leaf Farm, Putney School, up Vermont.
Yep.
And what's so important about this, it's a bunch of brats at prep school, and they say you're getting up at 5 and you're hitting the maple trees.
You got to go tap
this is like a Tabor down on Buzzards Bay where the kids got to dive into the ice cold water.
It's either that
What's
or
it like getting up at 5 a.m.?
It's cold. And it's dark, and it's either you could do that or you could go muck out the barn. And so, sometimes you want to tap the tree.
Thank you. But it's a seasonal thing. Does it start like in November?
February.
In February.
Yeah, they wait till the nice and balmy February.
Single-digit temperatures, and you got kids out there.
It warms up for a minute.
Is this more important than calculus?
Yeah, well, you want to make sure that things are as they should be.
Right.
And so there you have a bottle from last
Damian,
season.
pass this around to Lisa Mateo.
Which vintage is this?
It's way too healthy.
Are these aged?
Yeah, it does. Yes, folks, it does look like a bottle of bourbon.
Lisa's just going to get chocolate chip pancakes. She's going to smother it in that syrup. It's just going to be a nightmare.
I got too short a time with Lachman here.
Yeah.
I got whiplash.
Tell me.
What does the Economic Cycle Research Institute say so we don't get hurt by the volatility of the market right now?
Well, it gives you your bearings, is what it does. Coming at it from a cyclical perspective instead of like extrapolative models, you sometimes get an out of consensus move in our forward look. So last year was, hey, the economy's resilient. Remember last summer, people were a little shaky on all this.
Yeah.
Or inflation's going straight down last year, and we said, it's sticky. Now those views are actually the consensus views, right? That the economy's resilient, and
so what
inflation's
do you
down.
see forward?
So what we see forward, first and foremost, because you guys started off international, is U.S. remains exceptional. Going into this year. That's happening. Eurozone still languishing. China struggling, and we can get into the specific details. But that is, I think, the big overarching issue. The second thing to watch for globally, is a bottoming in global industrial growth. That could give you a lot of weird numbers. It could start to interact with EM, for example. And it could start to interact with things like sensitive industrial prices like oil. And then that brings me all the way back to your earlier interview on the rupee, right? Because India brings in a lot of oil. It's going to weigh on the rupee.
Well, you're the COO, you're the co-founder of, Mike, ECRI, the Economic Cycle Research Institute. I'm going to ask you the same question I asked Cam Dawson earlier. What inning are we in? I mean, where are we in the cycle right now? The U.S. business cycle.
It looks like it's... we're getting set for another run.
Wow, right. So we're not late inning like Cam Dawson would have you believe, Tom.
Yeah, I think so. So there's business cycles and there's growth rate cycles, and so we had a slowdown in 22, 23, and then now we didn't go into a recession because of labor hoarding. I'm just going to assert it, and then now we're reaccelerating out of that, and so for a moment. We've got this stronger U.S. exceptionalism. You've got a global industrial growth, I think, bottoming somewhere in this year.
Right.
And it's an open issue on inflation. I think that is the big call in 2025.
I got one more question. We spent too much time on your wonderful gift from the Putney School.
Tell me.
And this is going back to Wesley Moore and back before 1947 in the advent of productivity study. What does your work at ECRI say about this new American productivity?
Well, it's real right now. I think it's real. Productivity is really hard to forecast.
Agreed. That's why I'm asking, because you guys.
So look, here's where it is.
You have the humility to say that.
Yeah.
Others go, well.
So here's what
we believe.
If you're deconstructing it, it's pretty bad in construction. It's kind of so-so in manufacturing, and it's pretty darn good in services. In particular, where it's knocking the ball off the cover, or the cover off the ball, is in services and retail. The consumer is showing up big time. You see it in the numbers. And the productivity of that part of the service sector is huge. And maybe even that, I mean, dare I say, it even goes over to Wall Street and the financial numbers you're just showing. These numbers are real. There are profit generating. And they're here to stay as far as we can see. And I admit we can't forecast productivity that well.
It's 7 degrees in Putney, Vermont this morning. Lodgman, thank you so much. Lisa Mateo, thank you for the gluten-free maple syrup. Don't give that to Bar. You know, it doesn't. It's from the Elm Leaf Farm, Putney School. With our news in New York City, Michael Barr.
Thank you very much, Tom, Damian, Lisa. Israeli Prime Minister Benjamin Netanyahu accuses Hamas of reneging on parts of a ceasefire agreement. Hamas is objecting to Israel's veto over which Palestinian prisoners will be released in exchange for hostages. President Biden warned of a dangerous concentration of power in the hands of a very few ultra-wealthy people as he delivered his farewell address from the Oval Office. Wendy Schiller is director of Brown University's Taubman Center for American Politics and Policy.
The rhetoric about controlling things, the wealthy people, that's really old-fashioned rhetoric. I mean, we could argue that's Reagan, that's George W. Bush, that's Trump. That's the Republican reputation, and we'll see how the Republicans deliver for the working class voter who voted for Donald Trump and expects their lives to improve as well.
Wendy Schiller of Brown University, a guest on Bloomberg Daybreak. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, Lisa.
Michael Barr, thanks so much. Slip in here some time here with Damian Sassower. First thing he said when he came in this morning was, Tom, Korea.
South Korea.
Come on, Korea is the most capitalistic, strong economy in Asia.
Oh, sure.
Not. What happened?
Korea's having some issues with democracy. I mean, Tom, we basically have another impeached president in South Korea. This is like, it's almost like it happens every 4 years.
Is he arrested? Is he not?
Right, exactly. And he was not arrested. I mean, he has his own private security force that's keeping him out of jail. But look, at the end of the day, it's amazing just how important South Korea is to the global growth network. And so, the Korean won is basically bouncing off the lows. It's one of the few currencies that's up year to date. Go figure. I mean, it's bouncing off of all-time lows. But the yield differential, Tom, between the U.S. 10-year and the South Korean 10-year, it is an all-time tight, meaning the South Korean 10-year is way lower than the U.S. So if you're looking for carry, you're certainly not going to East Asia.
We have to see that. We'll talk about this with Damian. We'll save some time in the next hour to speak to Mr. Sassower, really about what's missing right now, which is the tension of EM, and does it speak back to the ghosts of 98 or 92 and even before that? Futures red and green on the screen right now. Morgan Stanley out with some good numbers. We're on YouTube. This is Bloomberg Surveillance.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Good morning, everyone. Well, it's a daily look at the front pages, and it's always brought to you by Interactive Brokers Trade. Over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more. On your timetable, learn more at ibkr.com/around the clock. Thank you, Interactive Brokers. Lisa, what do you got?
Well, we talked about this yesterday, but we didn't get into in detail because we had a ton of bank earnings. We had CPI. It was a crazy day yesterday. But this is about the FDA banning artificial dye red 3 from being used in food because it's being linked to cancer. I mean, this is something that's used in like candy, cold medicine, some drugs as well, baking decorations. But what's crazy is that 30 years ago, the FDA banned this from being used in cosmetics because they found that tumors linked to the dye in lab rats. I think the difference now is there was this provision that kind of pointed to different things that cause cancer in humans. So it kind of a provision change. So that's why they changed it going forward.
And I did, Damian, what you would do. I went and looked at those fancy overpriced cherries I have to buy for Manhattans, and I was comforted. They're completely free of red dye.
Well, Tom, it shows what I know. I thought it was banned 30 years ago. I didn't know it was cosmetics only. I mean, if you can't put it on your face, how are you allowed to eat it?
Why would you eat it?
Right,
I know.
exactly.
It doesn't make any sense.
And yet it's in so many different things, right? I mean, from sprinkles to, I don't know, you tell me.
So much. Morningstar
Cereal.
Farms plant-based bacon strips. I know, Tom, those are in your fridge. So the plant-based bacon strips, okay? So you're going to have to take them out. But this is just the beginning. It goes beyond this because they're looking at red number 40. Like it's going to keep continuing. So, which is a good.
Next, what do you got?
Okay, so Google signed this deal with the Associated Press to deliver up-to-date news through its Gemini AI chatbot. The reason this is big is because this is Google's first deal with a news publisher. So nobody's saying how much Google's going to pay AP for the content, but you'd start to notice a lot of these news publications. First, they were starting to license their information to train these AI systems, and that was a big deal. And even
Damian, where are you on this?
Speed over accuracy, Tom. It seems there's a focus on getting the news to people quicker, regardless of whether it's right or wrong. So I think, there's going to be some sacrifices and some bumps along the road. But if X is any indication of where we're headed with that, I think we should expect more of the same from Google.
Yeah, no, most definitely. And they even talk about this like going forward with entertainment. Like, is entertainment going to start licensing movies and films to these AI companies? That was talked about with Lucas Shaw.
It's all nascent. I mean, nascent, we really don't know where we are right now, right? Okay.
That's true.
What else do you have?
Okay, so Super Bowl, right? Big time for commercials, but State Farm pulling out their ads because of everything that's going on with the Los Angeles fires. They're saying they received over 7,400 home auto claims. They're putting tens of millions of dollars back into the customers' hands. And they expect that to rise because as more residents start to go back and assess the damage that's happened to their homes. But it's like it's spotlight on the insurance industry, how companies have been like pulling back from California.
Really difficult. This is going to be fascinating to see. Instagram's been very strong on this. different people talking about the tragedy that we're witnessing. One thing that would help would be LA strong. Are the Rams, Damian, are the Rams in the game? Like,
the Rams are in the game, but I want to be very serious here for 1 minute.
Yeah.
You know, we were at CREFC, we were talking about, you know, the LA wildfires and what does that mean for migration patterns out of LA? I mean, think about where people are obviously going to go. They're going to try and first go south. They're going to go to Newport Beach. They're going to try and go to San Diego. But then where do they go when they can't afford that and prices get ramped up, right? Do they go to Phoenix? I mean, do they go to, they come back to New York? I can tell you this, Tom, a lot of people are not staying in Los Angeles after this one. I think you're going to see some migration outward.
Yeah, well, it's under discussion.
And by the way, we're not going to get Danny DeVito and Arnold Schwarzenegger on the Super Bowl either. So, I mean, come on. I mean, what are we talking about? Wasn't that the big State Farm commercial last year during the Super Bowl?
Yeah, it was one of the top rated.
Yeah. We're doing, in honor of Damian, Tandon rested. Lisa Mateo, thank you so much for the newspapers today. Damian Sassower, Tandon rested. Did you get up to 149th Street in Miami? Criteria Studios?
I know. I was married to the conference and the conference venue. There were a lot of little things going on around the conference that I was invited to. Shout out to my friends at JP Morgan, the securitized sales desk there. The Todd. Who has the Todd? JP Morgan. That is something that I will talk about later.
We're doing Miami music for Damian Sassower today. You got to start. I mean, you could start with Gloria Estefan, but no! KC and the boys.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation is still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. We welcome all of you across the nation. Good morning, 99.1 FM in Washington. Coming up, an important voice from the Levant. Ethan Bronner will join us, Bloomberg News Israel Bureau Chief. We'll get an update, and it's been a very difficult 2 hours of news flow out of Israel. We're really going to get an immediate update from Ethan Bronner here in a moment. We're so packed, I'm going to get right to it. We'll have Damian Sassower, I believe, in this hour for an extended conversation. Bloomberg Surveillance. We're brought to you by Cohn Resnick Advisory Assurance Tax. For 4 years straight, Hedge Week has named Cohn Resnick Audit Firm of the Year. Let Cohn Resnick's financial services team show you why. Thank you, Cohn Resnick, for support this morning as well. Let's get right to it. Red and green on the screen. Morgan Stanley out. Good numbers. Bank of America out. Good numbers from the Interactive Broker Studios, our Bloomberg Business Flash. Lisa Mateo.
And we got futures mixed after those good numbers. Right now, NASDAQ futures up 0.1%, 35 points. Dow futures down 0.3%, 139 points. S&P futures are little changed right now. Let's get to it. So we'll start with Morgan Stanley, a beat for fourth quarter net revenue. Right now, their shares up about 1%. We go to Bank of America. They're up about 0.5% after net interest income for Q4 beat estimates. Then we hit the regional banks, U.S. Bancorp, PNC Financial, muted predictions for net interest income in the first quarter. That was due to slowing loan demand. So now we have PNC up about 1.5%, but we have U.S. Bancorp down more than 2.5%. Over to the two-year yield, 4.30%. That's up 3 basis points. The yield on the 10-year, 4.68%, and that's up 2 basis points. We have the Bloomberg Dollar Spot Index up about 0.2%. The Japanese yen is stronger. The euro, British pound weaker, and we have Bitcoin down about 0.5% at just over 99,000. Shares of chip equipment companies, they're getting a pretty good boost. That's thanks to an upbeat outlook from Taiwan semiconductor manufacturing. That's up about 3% in Taiwan. So you have Applied Materials up about 3%, and ASML Holding up about 4%. That is your Bloomberg Business Flash. Damian and Tom.
Lisa Mateo, thanks so much. With the death of President Carter, we looked back at the struggle of the Camp David Accords. The struggle now is far more visceral, and in our modern media, including Bloomberg headlines, far more immediate. No one has lived this like Ethan Bronner. He's Bloomberg News Israel bureau chief and definitive on Levant. I hate to say it, Ethan, but me, the amateur, saw this coming. I saw the celebration, 12 hours ago? And now I've got in the last 120 minutes backtracking and immense fragility. Tell me about the cabinet of Netanyahu. Tell me about the Israeli parliament and where they fit into this matrix right now.
Sure thing, Tom. You're showing your experience with your cynicism. I mean, it's not really cynicism, but look, I think that the difficulty is that there are two things going on right now that are slowing the deal. One is that, according to the Prime Minister of Israel, Benjamin Netanyahu, Hamas has imposed new demands and reneged on other agreements, and therefore he's not letting his negotiators leave Doha, the capital of Qatar, to come back and brief the cabinet to vote on it. Now, if and when there is such a vote, it will pass. But there is that. Now, there's the other problem, which is two far-right parties are opposed to this deal. One of them has said it would bolt the government over it. The other has just had a 2 or 3 hour meeting and decided it won't bolt it now. It'll let the deal go for 6 weeks. But if Israel doesn't return to war after that, then it will.
With me today, Damian Sassower with really great expertise. You know, we could go to Jacob Frankel, the former governor of the Bank of Israel, but there's a linkage here, Damian Sassower, of Ethan Bronner's world into just a fractured economy from Cairo up to Ankara.
Ethan, I just want to look a little bit north of Israel here. I want to look to Lebanon because some fascinating things are going on. It's the best performing bond market on the planet here in 2025. They're basically in talks to restructure $30 billion worth of bonds after their most recent election. Talk to us about Israel. I mean, the two-pronged fight, Hamas and Hezbollah, they look north. What are your thoughts there?
No, I mean, you're absolutely right. I mean, that's crazy business. That if these deals can go forward, there is an enormous amount of money ready to start investing. Israel is, by the way, as soon as there was a notion that there would be a deal here, Israeli assets started to go up, including the shekel. So you're right. And, there is this very, very delicate moment in Lebanon right now where we're perhaps in a post-Hezbollah moment. It's hard to really know. It's hard to believe it. But if we are, then perhaps we could enter a post-Hamas moment in Gaza. But, the betting, I would say, it would be probably in the other direction. I mean, it's not been a great period for the region.
Well, Ethan, rates, FX, I mean, you're right in my wheelhouse there, but let's talk about commodities. I mean, Brent crude up 9% year to date. The Bloomberg Energy Index is up over 10% this year alone. Obviously, a lot of that has to do with the ceasefire arrangement. If it doesn't go through, can things just, snap back that quickly?
I don't know. I really find it hard to believe that there will not be a deal, to be honest. But, there's so much hesitation right now in Israel that it makes me worry that it could fall apart.
What is the Trump constituency in a complex Tel Aviv and Jerusalem among the cabinet? Ethan, I'm making a joke. The 14 parties of Israel. What is the Trump constituency within the people of Israel?
Well, what's really interesting about that, Tom, is that this is one of the few countries in the world that wanted to vote for Trump if it had a vote in November. It was 70% pro-Trump. Now, what has happened here right now since this deal is that the far right is feeling betrayed by Trump, and the left is embracing Trump because the far right thinks that they're giving up too much. And this is true, by the way, of conservative Jews in the United States, Commentary Magazine and so forth, who are saying that Trump has betrayed Israel by pushing for this deal. That is not how the center and left feel. So it's a really strange situation.
We have to leave it there. Ethan Bronner, thank you so much. And thank you to Alyssa Odenheimer and Dan Williams for their journalism out of Tel Aviv today. The headline, and let me tell you, this may not be the headline in 20 minutes. Israel says new demands by Hamas, casting doubt on Gaza deal. We'll stay abreast of that through the day. And I know David Gurin, the Big Take, focused on it with a good effort in the last 12 hours as well. So much going on here within the equity markets. We had a lift to the markets. It's pulled away. I will editorialize it as pulled away because of the tensions that we just heard from Ethan Bronner. I could be wrong on that. I do have a bit of a yield reversal, and I've got the real yield, the 10-year real yield, which is what Damian and I look at that, back to a 224. I bring this up because we've got to go now to link these market actions in the world of Damian Sassower into the work of Francis Donald, who joins us right now, chief economist, RBC Capital Markets. Francis, I'm sorry, the theme I've got going today with the luxury suppliers in Switzerland with Richemont is productivity's tangible and consumption's tangible. Do you push against that?
I'm not sure what tangible is an adjective. There's a lot of other adjectives that I would use to speak about this.
Well, we're plus adjectives, so, what do you got?
So productivity. A uniquely American story. Productivity, very real, fed through a variety of different factors in the United States. Productivity, on balance, disinflationary. Productivity, a structural story in the United States, not just a cyclical one. Productivity is maybe the most under-discussed element of U.S. exceptionalism. It's feeding into a higher neutral rate.
Can you measure it right now, or do you have to wait 5 years?
Well, here's the thing. How I feel about most economic data is that our measurement is one thing, but the most valuable thing is the direction and the delta. So look at the change and look at the relative value.
That's a Greek letter, Damian. Did you see it? She's the only reason she's on.
The change in. So
right.
What do we know about American productivity? Would I hang my hat on a specific number that comes through? Maybe not. Would I tell you it's much higher in the United States and accelerating? Yes, with conviction.
Did you name your children Alpha, Beta, Gamma?
No, I named them productivity and K-shaped economy.
K-shaped economy.
All right. So, and Francis, here we got to ask you: you're not calling for any rate cuts this year, right?
Not as a base case,
which is right, which is above consensus. I mean, look, I think we're calling for 125 bip cut through the end of this year. I want to know, in your opinion, where you believe rates are headed, not just this year, but into 2026. I think where's the terminal rate? 375 if you look to the end of next year. Something like that. That's not much at all if we even get there, And so, I guess my question for you is, how do we get there?
So here's my big problem in forecasting any variable at this point. If we were in a proper cycle and we were dealing with cyclical dynamics, and that's the base case assumption we have to make, I would say the labor market is strong enough and inflation is too sticky and there just isn't enough data for the Fed to cut at this point. By the end of this year, we maybe even have to start talking about a reacceleration in interest rates. That is what I would do if we were in a standard cycle, and because that's the information we have, it is our base case.
So then let's look at the glide path of where interest rates are going. Let's look at where we've just come from in this most recent move in yields, right? I look at the 2-year, I look at the 10-year, I decompose those returns, I look at growth and inflation expectations. 10 years telling me that real yields, it's growth expectations that are going up. 2 years telling me it's inflation expectations that are going up. I'm trying to reconcile the two. What are your thoughts?
Well, it's both, but I say you start with the cyclical path, and you have to recognize we're about to get a ton of, Tom, you like this, exogenous shocks. It's the name of my third child, where you're actually going to see a variety of disruptors.
The exogenous shock is the first big tuition payment. Continue.
So we're about to get a series of hits to this path that we are on. We are probably going to get some version of a tariff shock. That's inflation up, growth down. So 2 years thinking on the curve. We're going to get a shock to the immigration path. That's also going to reduce the amount of labor and probably inflationary. We're going to get deregulation. Well, that might actually be growth up, inflation down. So there's so many variables to this path. And I know that my job is to come on here and tell you with conviction, this is the Fed call, and here's the 5 reasons, and the market is wrong. I know that's what makes a better interview. But the hard truth is we got to come up with a path based on what we know now. Where we know now, the Fed doesn't have enough data. Could they have enough data for a hike or a cut by year end? Yes.
I did a panel with you in Toronto that was electric. It was just really superb, and now we've moved on with Canadian politics. Bloomberg leads today with a tariff story by Brian Platt, really good. Canada's going to push back against President Trump. In the visible leadership there, someone my audience really doesn't know. Who is Doug Ford, the Premier of Ontario? Is he going to stop the traffic over the Windsor Bridge into Detroit?
Well, Doug Ford is the Premier of Ontario, which is about 40% of Canada's economic growth. So
it's
a
the
critical
California
leader.
of Canada.
Well, you might think of it that way. It is an engine of manufacturing for the entire economy, and it is a critical component to the entire story. Also, of course, where many business leaders live, Toronto is inside Ontario. But there is a really critical story that I think Americans need to hear, both politicians and the general public, which is when I'm in the United States with my clients, what I hear about tariffs is low probability, low impact. But the rest of the world is not thinking about tariffs that way. They're thinking medium to high probability and medium to high impact, not just for the affected countries, but for the United States as well. So this story about tariffs acting much more like a tax for the American people has been lost, and there are Canadian politicians that are really trying to explain this. This is really critical and very economically true concept.
With all the advantages you have of the Royal Bank of Canada, how will this be expressed? Did they shut down auto parts to Detroit in the corridor down the Mississippi River and over to Kentucky? What's I mean, Chrystia Freeland
Got to get through an election first, Tom.
Cattle or that, but what's going to be the actual thing that RBC sees?
Well, I'm glad that you think I have the answers to all the political developments in
I know
Canada.
It's an election,
but the issue is that not only are we dealing with the uncertainty of what the American government will put forward, but we also don't yet know how a Canadian government will respond to that, or a Chinese government, or how the rest of the world would respond. So I think the way to think about this is that for the United States, what they're likely to see is a lot of pushback against an economic policy that would be really problematic. But there are a lot of conversations happening between the United States and Canada that are not just about tariffs. There are conversations about critical minerals. So Canada provides 40% of the nickel to the United States. There's conversations about Canada's access to the Arctic Circle and what security it can provide there. There's conversations about border security. So this isn't just an economics conversation. I, of course, am specialized in the economics component, but it is much bigger and broader. It is about this bilateral relationship, and that bilateral relationship will be really important for the United States in the next several years, as well as Canada.
Francis, I'm going to quote the name of your fourth child when I ask you this next question. Idiosyncratic. Let's talk about Fed exceptionalism. It's the narrative that everyone's hanging their hat on here. In years past, I'm talking most recent past, last year, last 2 years, it's actually been good for the rest of the world, right?
I don't know if this was a Freudian slip. The word that's often being used is American exceptionalism. And what I tend to say is exactly this. Maybe you read my note and it's been internalized, is that American exceptionalism is leading to Fed exceptionalism. What do we mean by that? The United States is the only country post-COVID that has seen its neutral rate, its level of interest rates required in its economy to be much higher. This is not true in the rest of the world. So what we've been talking about a lot lately, especially in the FX markets, is the cyclical divergence that's occurred between the United States, Canada, Europe, Australia, and the EMs. But our view is actually this is not just cyclical, this is structural in nature, because the reason rates are higher in the United States is not just because the economy right now is doing better, it's because it has pillars of fiscal spending, productivity, and other elements.
I don't care. All I care is how good are your seats at Leafs Canadians in Montreal Saturday night?
Well, they would be better if you took me, Tom, probably.
Oh, come on. RBC's got the box there. I mean, they're like 4 rows over for where Mrs. Bella was.
We're talking RBC,
Tom, we're
not
about
CIBC.
to enter a trade war. Do you think I'm at hockey games? I'm running GDP forecasts and scenario analysis right
Damian
now.
would be.
Oh, I mean, I have trouble with the what if tab on my Excel sometimes. I can't get it to line up the right way.
The Canadians have won more games than they've lost. It's a move in the right direction. Francis, thank you so much. Seriously, the tariff discussion, we have to have you back a lot more for that.
It would be an absolute pleasure, and I look forward to hearing more of your guests talk about what this means for North American relations.
Francis Donald, thank you so much with RBC, real leadership there on a tariff debate to come, some of the nuances that we see there. Red and green on the screen, the VIX under 1716. 0.30. With our news in New York City, Michael Barr.
Thank you very much, Tom, Damian, Lisa. Prime Minister Benjamin Netanyahu says that a last-minute crisis with Hamas was holding up Israeli approval of a long-awaited ceasefire that would pause the fighting in the Gaza Strip and release dozens of hostages. The Israeli cabinet was expected to vote on the deal today, but Netanyahu's office said they won't meet until Hamas backs down, accusing it of reneging on parts of the agreement. Despite the roadblock, the White House National Security Communications Advisor, John Kirby, says that he believes this deal will ultimately go through.
We're confident that we're going to be able to start implementing it on Sunday. There are some implementing details that still need to be ironed out. We're working with the Israelis on that very, very hard right now, but we're confident that we're going to get there.
John Kirby spoke on ABC's Good Morning America. British Prime Minister Keir Starmer has visited Ukraine's capital. Starmer pledged to help guarantee the country's security in a 100-year partnership. Fire-ravaged Los Angeles may see some relief today from the high winds that have fueled the region's deadly wildfires. More from Bloomberg's John Tucker.
The dry, dangerous winds that have kept Los Angeles on edge for days are finally forecast to end, but a lack of rain and another round of winds forecast next week already has officials worried. The last of the red flag warnings that blanketed much of Southern California this week was expected to end at 3 p.m. local time. Los Angeles Mayor Karen Bass visited a disaster recovery center.
We're not out of the woods yet. There is a chance that the Santa Anas might spike up again next week.
The two largest fires burning in the area, Eaton and Palisades, have become among the most destructive in California history. The flames have killed at least 25 people. There are 26 still missing. The Palisades fire was reported 19% contained. The Eaton fire was 45% contained. I'm John Tucker, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, Lisa.
Okay, we had to do Lions, Redskins, Commanders the last time around. I'm sorry. To me, it's almost a Super Bowl. Michael Barr, is Ravens-Bills Sunday the Super Bowl?
That's going to be a much-watched game, and possibly that could be the AFC champion coming out of that game.
And just entertaining, to say the least. I mean, in the little bit I know about this, both of these teams are just magnetic is almost the right word for it, right?
Oh, it's going to be great. I mean, I have to say it, and there's no disrespect to the people in Kansas City, but I don't think this year they're going to make it
interesting
back to the Super Bowl.
I see CBS Sports, their pick is Bills 31, Ravens 30.
Yeah.
I have no idea how they get to that number as well. Michael Barr, thanks so much. Much more to talk about here on a terrific news flow with the leadership of Mr. Barr. I want to go to foreign exchange right now with DXY critically back above 109. I've got some dollar rebound after the weakness yesterday. Sigh of relief. There's a churn to the tape looking at equities, bonds, currencies, commodities, and within the system, yen under 157, giving me stronger yen, and critically yen versus euro, the so-called euro-yen, giving me a much stronger yen in the last 3-4 days. Importantly, cable can't get out of its way, a 121.86 on cable. Damian Sassower, we'll talk about EM here in a moment. Renminbi 7.33 yuan. I say renminbi. Damian says yuan. What that about? I don't know. Canada, after that great, thanks for the comments on YouTube on the tariff. The loonie, 143.87. We do that for Francis Donald.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimal financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we are just moments away from more economic data, talking about retail sales, import prices, the weekly report on initial jobless claims. Ahead of it, we have NASDAQ futures up 0.2%, 50 points. Dow futures down 0.2%, 100 113 points. S&P futures are little changed. The 2-year yield, 4.31%. That's up 4 basis points. And the yield on the 10-year, 4.68%. And that's up 3 basis points. I have to point out Brent crude down about 0.5% at $81 a barrel. WTI crude $79 a barrel. We have the Bloomberg Dollar Spot Index up about 0.2%. Shares of Target, a bit of a change here. They were higher. Now they're lower, down more than 1%. And that's despite positive holiday sales. Then we go from retail to entertainment. Blackstone said to be seeking at least $3 billion for the song rights of artists including Bob Dylan, Adele, Ariana Grande. And finally, Taylor Swift's record label headed for a U.S. listing. Shares in Universal Music, well, they could soon be listed on a U.S. exchange. That's because of a $500 million stock offering by Bill Ackman's Pershing Square. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Damian and Tom.
Lisa Mateo, thanks so much. This place runs like a Swiss clock. I mean, we got a team, and they have a meeting at 9 p.m., Damian, every night.
Okay.
And they know they can't guess the news flow the next morning, but they're sort of like lining up the guests. And this is the pixie dust, folks. Huge response to Francis Donald at RBC attending, Damian, that discussion over tariffs and all that.
Canada.
And that team knows at 9 p.m., no one can follow up Francis Donald like Diane Swank. She is the chiefest of chief economists. You're going to love this. At Bank One. I'm kidding. Diane Swank joins chief economist KPMG with all of her excellence of the Midwest, of Michigan and of Chicago, University of Michigan, Ann Arbor, and Chicago as well. Diane Swank, we were talking about Windsor and tariff naivete of Americans. Does Doug Ford, as Premier of Ontario, and whoever lands in the politics of Canada, do they shut down that Windsor Bridge into Detroit and down the Mississippi River?
Well, it's something that is very important. I mean, the number of things that go across the bridge every single day and back again is staggering. These are, how integral the auto industry and those borders are for the auto industry, right down into all the way from Canada down to Mexico and back up again. I mean, sometimes a car goes over the border, parts go over the border several times before they even become vehicles. And I think, breaking up is really hard to do, and that's important to remember.
You've lived the complexity of this. Do we have complexity in 2 minutes with retail sales?
So retail sales are really complex because I think they're going to be good, but they're good. Although what I'm worried about is the dissonance we see between how the economy adds up on paper and how people are experiencing it. The overwhelming majority of Americans still are experiencing the economy very negatively, and actually have gotten more negative in recent months in fears of price hikes, which is its own self-fulfilling prophecy for the Fed, because if you hoard to buy ahead on a big ticket item like a vehicle, you're going to push the prices up. And that's what we saw in December. A lot of that was just replacement demand, but if any of that becomes, sort of the early January, it carried into the consumer sentiment index, that's something we worry about, is that dissonance that we have still going on.
Diane, it's so wonderful to have you here. I've been sitting next to Tom. He's talking so much about Canada. I feel like I'm in a Ryan Reynolds movie. But let's talk about the Fed here. They made no secret about their asymmetric view on policy rates and inflation, opting to ease first, ask questions later. Where does the Fed head from here? There's only 125 bp cut priced in through the end of next year. I mean, is that right?
And I think we're close to that. The Fed is not going to front run any of the policies and their reaction in the economy, because let's face it, how many things have we all forecast wrong in the post-pandemic era? It's just been a very odd and different kind of economy. And even when you think you have a handle on it, you don't want to front run that. So I think we still get another quarter-point cut by March. I think the Fed speakers are signaling that. But if it's true that we see the tariffs come in, even if they're phased in 2 to 5% a month, and over time, it took almost 8 to 11 months to implement all the tariffs that were issued by executive order in 2017. That's important to understand. There's a lag, but over time they accumulate. And this context of this environment is just very different than pre-pandemic, and the Fed has to worry about that.
Diane Swank with us, and speaking of the Fed, of course, she's a value add for us with the Fed Decides as we stagger to the Fed meeting, the end of the month. Part of their mathematics at the Fed meeting will be CPI yesterday into a calculation of their inflation rate of PCE, but also the state of consumption. Retail sales here in 15 seconds is a nominal number. It's a top-line number. It's the prices we pay, if you will. We're going to have Diane Swank with us to give us wonderful perspective. Red and green on the screen, futures up 3. Now with our economic report, Lisa Mateo.
And his numbers.
This is breaking news from Bloomberg.
And as the numbers just come in, we'll start with retail sales. So this for December, the expectation was for 0.6%, came in a bit lower, down at 0.4%. The previous was for 0.7%. Now you take auto and gas out of the picture. That expectation was for 0.4%, came in a bit lower as well, 0.3%. Then we go down to initial jobless claims for last week. Now here was a survey. It was for 210,000, came in higher, 217,000. The previous was for 201,000, but that got revised up to 203,000. Now we see the reaction on Wall Street. So we have NASDAQ futures still up about 0.2%, 55 points. Dow futures down a little bit further, down 0.2%, 125 points. S&P futures are still little changed. We go to the 2-year yield, 4.29%, up 2 basis points, and the yield on the 10-year, 4.67%, and that's up about 1 basis point. Damian and Tom.
Lisa, thanks so much. I'm going to call it a churn to the tape here. It's not the certitude that we saw yesterday, and the yield structure higher. Again, Diane Swank with us. And Diane, I'm unsure if you've got the data in front of you at KPMG there, but I have a retail sales control group, which takes out this, that, and the other thing with a tangible lift. I don't have the revisions yet. Is it a stew of data, or can we say there's an oomph to retail sales?
Well, we already had, we came in with a very strong quarter, and we ended on a high note in the third quarter. So we didn't need to do much in the fourth quarter in order to see strong gains. We're still going to see very solid gains in the GDP numbers as a result of these numbers. And what we know is things like vehicle sales went to their highest level since May 2021 in the month of December. Again, much of that buying to repair and replace things that were damaged by the hurricanes, and we have yet more devastation, heartbreaking devastation, which could be the worst disaster we've ever seen with the fires. But these kinds of things we're starting to see. This was a holiday season where we stepped out in ways that vacation numbers and the employment data, that went to a record high for the month of December, 2 weeks before the actual holiday week in mid-December. And the record goes back to 1976.
Damian, get one more in here.
Well, we had the backward revision, right? So I think Diane's spot on, right? I mean, tariff front running notwithstanding, we saw a lot of the strong holiday shopping season happen early. So, I mean, strong auto sales ahead of tariffs. So I get all that stuff. But, you know, I think this sort of weaker headline print is sort of kind of offset by the fact that we had a bit of an upgrade back to the prior estimate. But, you know, look, and to your point, the control group, I can't make sense of that. I mean, I'm not an economist here, so to speak. And I know Anna Wong was calling for a blowout retail sales print. She was looking for something like 0.9%, so we didn't quite get that. But in the control group, Diane, just any thoughts what you're seeing there?
Well, you know, I think what we're seeing is we saw a pivot online. We haven't seen as much spending in building materials stores and garden stores as we had seen and expected to see in response to the hurricanes, even though they said they were doing really well. And that's stripped out of the control group. But it really is a situation where we saw some comeback retailers were saying they didn't see, a lot compressed into the month of December of the holiday stuff, but they couldn't promote like they usually do because, in fact, competing with the ad space during the election was much harder because it was very expensive.
Diane, thank you so much. Too short a visit today. Diane Swank with KPMG here on a complexity of retail sales. Let me bring that up again on the ECO screen. I still don't have good revisions in yet. I got one advance month over month. I'm not going to say too much about that, but it's a soup there, and I guess people are front running the tariffs. I'm not sure I buy that, but that's what I'm hearing from pros.
Well, I'm just looking at where yields are reacting here. The 10-year kind of picked up. I mean, just, it's up a bit off the news. Nothing really crazy there from where we were. So you're right. I mean, like usually retail sales has a bit more, how should we say, oomph when it comes out like this.
Yeah.
But the markets seem to be looking through it.
Morgan Stanley up fractionally as well. Let me look at Bank of America here right now. We could do this on the Bloomberg Professional Service. Bank of America's back to flat. And part of that is they were up the last 24 hours with JP Morgan and with all of it. I mean, we had the lift yesterday.
Yeah, no, and then the tech sector is being carried by TSMC overnight, so nothing's really changing there.
Yeah. I get to talk to you in the next hour. It's going to be great.
We're going to talk about EM rates, FX, and credit, all of it, all at once.
Can you come in here with less than 3 inches of notes?
No, I'd like to kill.
How many trees are you killing? Damian Sassower, prepared here into the 9 o'clock hour. Good morning on YouTube. Subscribe to Bloomberg Podcasts.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures mix, and this is after retail sales rose by 0.4%, less than analysts expected, and weekly jobless claims rose more than expected. Now, aside from the data, we also had more bank earnings and some good news there. Morgan Stanley reported a beat on equity sales, trading revenue. Bank of America, investment bankers there boost earnings as loan income rises. So we'll start with Morgan Stanley. They're up about more than 1.5%, and Bank of America right now, their shares are little changed. We go to NASDAQ futures up 0.2%, 62 points. Dow futures down 0.3%, 132 points, and S&P futures up about 0.1% or 6 points. The 2-year yield at 4.28%. That's up 2 basis points, and the yield on the 10-year 4.66%, and that's up 1 basis point. That is your Bloomberg Business Flash. Damian and Tom.
Lisa, thanks so much. Bloomberg Surveillance this morning brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost, global trading, and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. The team is just killing it. They're getting out front with all the guests that stagger into 731 Lexington Avenue and go, what's the angle? Here's the angle. A 4 standard deviation move in the Swiss shop that sells us and the Sassower family Cartier. Damian, is there any Cartier in the Sassower household?
We have friends in the right places, Tom. We don't have to shop at Cartier. Come on. We know people on West 47th Street here in Manhattan.
Oh, very good. Joining us now, the authority, we get a huge response when he's on, James Steele of HSBC. Are you surprised that the Western world and part of Asia showed up for Cartier and I guess the others as well in gold this holiday season?
No, not really. Thank you for having me, by the way, Tom. Jewelry, however, overall is down, and that's because of the price. So we have seen a pullback in bar demand, in jewelry demand, and also in coins. So the physical market is reacting to these prices, but the investor market remains very strong.
Jim, gold and silver are having some really great years here. Obviously, yesterday's CPI print, there was a pretty big market reaction to that. Talk to us, though, about, the look-through from other asset classes that people are trying to attribute to precious, like crypto. I mean, do you even look at Bitcoin in your day-to-day?
Well, as far as we can determine, crypto itself has had no impact on trading volume and in the precious metals.
What about a sentiment indicator? Do you see any correlation there with prices? I've seen a lot of work put out where people try to correlate the two. I personally can't circle the square.
No, we haven't. The difference is in the tangibility of precious metals. Why does an investor buy gold or buy silver? In order to hold it, to have it. There's a physicality to it. There's an ancient litany to it. That also, it behaves properly in times of crisis. But you need data, you need information, you need history to be able to tell you this. So as a portfolio diversifier, which gold shines in, these things are not, we don't know if crypto will be able to do that.
To Damian's really important question, with Cartier founded in 1847, I think 24 months before the first Civil War in Paris, I'm guessing, do we buy that Cartier band now, the one at the Sassower house, or for the same reason, I should say, that we did in 1847? Nothing's changed, right?
No, gold remains. I mean, in that sense, I wouldn't propose anyone buy any particular brand, but gold itself remains a portfolio diversifier. It remains something you would go to in times of uncertainty, and I think that's one of the reasons it's been so popular. You just look at things like your geopolitical risk index, which has been up significantly, and there's been a lot of academic work done in the past couple of years, a revival in academic work done on the relationship between gold and geopolitical risk.
Well, Jim, I'd love to ask you about central bank buying, right? I'd love to ask you about Russia, China, a lot of these, the hermit states that are out there. They're basically taking their dollar reserves and they're basically selling those and they're replacing it with gold. I mean, Turkey's another that comes to mind. Talk to us a little bit about that theme. Is that going to continue? And what kind of bearing does that have on the future of dollar hegemony?
I think you've put your finger on one of the main reasons for gold going higher. In 2000, the average central bank purchases over the last 10 or 15 years, 400 to 450 tons a year out of a near 4,000 ton mining market. Right. That increased to almost 1,100 tons in 22, was still over 1,000 tons, in 23, and was not much below that last year. So we are still looking for very strong central bank buying. Now, the dollar issue, I think, has got to be looked at almost Jesuitically. The dollar is not leaving as the world's reserve currency anytime soon. And that's our position. And I think that's the position of almost everybody. But that's not to say that every single central bank in the world needs quite as many dollars as they may have. And if they are reluctant to go into another currency, because don't forget they're limited to what they can buy.
They buy gold.
They buy gold. If you don't want to buy the euro, the yen,
so if
the
Jerome Powell's down at Cartier on Fifth Avenue buying something for Mrs. Powell, does that build out Fort Knox?
No, Cartier don't have you on the payroll somehow, Tom.
No, they're on earnings today, and I'm selling Angelina Rasco is going to join us from Paris here in the next hour. Here's the money question.
But I think we will still see current central bank buying without doubt.
Here's the money question. The memory of older people is the interregnum from 82, 83 out to 2000 where gold went nowhere. Yeah. Does James Steele see a log vector of appreciating gold prices, or do you fear that nothingness of those 15 years?
Well, this is where geopolitics circles back and where monetary policy circles back. I mean, the high for gold was in January of 1980, $850 a ton, which is something like $3,400 in today's money. Okay, so in nominal terms, we've been up record highs. In real terms, we're not quite there yet. And what happened after that? Paul Volcker came in, high interest rates, but also the death knell was the end of the Cold War, 91.
Right.
And geopolitical risk seeped out of the market, and central banks in Europe sold gold as a consequence for the next 15 years. So I don't see that.
Okay. I got one other question. The Panthère de Cartier watch at 21,000, the mini model quartz movement yellow gold, is that a good use of gold investment?
Well, I always like bars, the plain bar
Did you? Okay.
itself, but nothing against the excellent work that Cartier do.
Thank you. James Steele, HSBC there. And of course, this question came from Michael Barr because he's looking at gold bars with our news in New York City. Michael Barr.
Thank you very much, Tom, Damian, Lisa. Israeli Prime Minister Benjamin Netanyahu accuses Hamas of reneging on parts of a ceasefire agreement, risking the deal's completion. The ceasefire agreement, which includes a 6-week truce and prisoner releases, is now uncertain as Israel's security cabinet says it won't meet over the ceasefire until Hamas drops new demands. White House National Security Communications Advisor John Kirby says, though, he feels confident that the deal will go through and they could see a rebuild of Gaza in further negotiations.
The post-conflict Gaza, what that, all the governance that needs to happen there, meeting the aspirations of the Palestinian people, all that needs to be ironed out, and it's going to have to be done regionally.
John Kirby spoke on ABC's Good Morning America. President Joe Biden has used his farewell address to the nation to warn of an oligarchy of the ultra-wealthy taking root in the country and of a tech industrial complex that is infringing on Americans' rights and the future of democracy. Speaking from the Oval Office, Biden also called for a constitutional amendment to end immunity for sitting presidents. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, Lisa.
Michael Barr, thanks so much. Damian, do you keep track of gold in emerging market central bank vaults?
Absolutely, you have to. No, I mean, look, I like to look at what's
bigger, right?
It is. I mean, but look, it's very hard to parse out in real time what exactly it is they're buying. You don't find out about it, Tom, until like a year or two later when you get the real breakdown.
Really?
Yeah.
It takes
delayed.
2 years for you to.
No, I'm lying. Maybe it's 6 months, but it's certainly a lag, and it's not really anything that you didn't know at the time. So
Thanks for the comments on James Steele. Wonderful to have him in here on a more the elegiac property here. Jess Benton just walked in, draped in Cartier. I mean, it's just amazing how that works. Red and green on the screen right now. The VIX 16.21. We're on YouTube. Subscribe to Bloomberg Podcasts. This is Bloomberg's Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Damian Sassower in for Paul Sweeney. I'm Tom Keene. Lisa Mateos showed up as well. The highlight of the day was the Putney School maple syrup. Thank you, Nathanson, for that. Joining us right now with really the toughest job yesterday to pick up the debris on a huge market. Jessica Menton joins us. Now, was it just one big short cover? Come on, everybody was gloom and doom. The numbers come out and everybody goes, go to cash, right?
So if you look at Goldman Sachs, so they have a basket for the most shorted stocks. So that was actually up more than 3%. So in relation to the S&P 500, 1.8% gain, obviously you saw a big move there to cover some of those most shorted basket in those stocks. And usually when you're thinking about those types of names, sometimes those can be more of the non-profitable types of names. So actually it was more of the riskiest corners of the market that benefited most yesterday.
So what's the then what? You and your team. She's got an entourage of 14 people.
I've seen her.
There's like 30 people over there.
Chris Nagy doesn't even know where
Texas
to
offensive
sit
line.
people down. Yeah, exactly. What's the so what after a day like yesterday?
So actually the 5 or 6 trading sessions leading into yesterday, the most shorted basket was actually lower. So that kind of tells you that, well, will we see this continue when you're going to see the most shorted stocks outperform the next couple of sessions? Obviously, we have to wait and see how things roll out today and tomorrow.
Well, Jess, equity momentum is the best performing strategy year to date, low vol being the worst within the equity complex. But here, I really need to ask you about this. Is now the time to really lean into growth, or should we be kind of pivoting to quality? Because I'll tell you what I'm looking at. I'm looking at small caps. Small caps were up last year. They were up the year before, and they're up another 1.5% this year, actually better than the NASDAQ, go figure. So talk to me a little bit about what signaling that means for you.
Yeah, so the Russell 2000 was another part of the riskiest corners that took off yesterday. So that was up actually more than 3% as well. So outperforming the broader indexes, but also relative, if you're looking at the Russell compared to the S&P 500, it underperformed that index last year for the 4th year in a row. And it was its worst performance relative to the S&P since 1998. And I know a lot of people want to talk about how, say, the zombie amount of companies that are in the Russell versus the S&P 600, because those companies tend to be more profitable. But if you kind of zoom out and look at the performance, whether it's the S&P 600, the 2000 for the Russell, or even if you're looking at mid caps over the past couple of years, they've actually kind of gone in line with each other. So that's sort of been the caveat where people are arguing against that, where they still want to step in and buy growth.
Tom, you hear her talking about S&P Russell ratios. I mean, she's going to be talking about gold oil ratios. But Jess, no, seriously. I mean, it's early on in the year, obviously. I think it's this U.S. exceptionalism theme seems to be in everyone's books. Talk to us a little bit about what that means, not for U.S. equities, but for equities globally and the rest of the world.
Well, that's been the big case, too, because internationally, especially coming into 2020, people were kind of making the argument that maybe they could potentially start adding that more exposure internationally, especially when you're thinking about emerging markets. So actually, Ned Davis put out a call. So Tim Hayes is their equity strategist that has gotten a lot of calls right the last few years, and they warned that they could end up cutting some of their global exposure depending on if, say, you were talking about ratios earlier, but if you're looking at the stocks to bond ratio, if that continues to fall, that they're going to actually end up cutting their global equity outlook.
The VIX move ratio? No, I'm just kidding. I was just having fun with you.
Jess Menton, thank you so much. Greatly appreciate it. Do you ever look at the VIX? Does the VIX matter to Jess Menton?
It does. Of course it does. Because especially if it's above 20, which we've seen a few times, then that technically you could see more about that. But actually, if you look at, this is from ASIM 500, Rocky Fishman put out some data, and I wrote a story about this yesterday, how if you're looking at the volatility, so the realized vol over the last 3 months for the big macro days, so CPI, Fed days, as well as job days, that's about 22% right now. So it's double the average volatility over that same span. So that tells you that traders are obsessed with macro days again.
You have so much energy. Do you have your own row over in the stocks team?
I feel like they're debating about giving me one. Just gotta leave her over there.
Jess Menton, thank you so much for the stock update. Yesterday was really extraordinary. Even more extraordinary is, Jess Menton, Lisa Mateo, myself, we're like, not tanned and rusted like Damian Sassower.
Here we are.
In honor of his 4 weeks in Miami, we're playing songs recorded in Miami. I didn't know this. Lindsay breaking up with Stevie. Stevie breaking up with Lindsay. Let's go to Criteria in Miami and record a classic. Good morning.
go your own way.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, Damian Sassower in for Mr. Sweeney. We're having fun this morning because of guest quality off the chart. In this hour, Angelina Rascouet will join us from Paris. Terry Weissman of Macquarie as well. Deep into upstate New York, Michael Nathanson for an extended conversation. We will touch with him in a moment on the fire and what it means for his industry with MoffettNathanson in L.A., and Damian Sassower for an extended conversation here. We'll do that on the far side of the 9 a.m. hour. We welcome all of it. What have you learned this morning, Damian? What's the thing that sticks out so far in our conversation?
Well, it's just what inning we're in. I mean, there's such a dichotomy. I mean, I've asked it now of a few different people. I mean, where are we? Early in the cycle, mid-cycle, late cycle? It is just anyone's guess right now, Tom.
This came in. Thank you for this out on YouTube. Damian's styling Lisa. For those of you on Bloomberg Radio across the nation, Lisa and I are sort of in, media drab. Damian's styling the Wall Street 2025. Look, this is a beautiful, like wool, mini thing.
It keeps me warm, yeah.
Is there anyone that's not wearing this in Manhattan?
Who's not wearing it? I mean, look, it's the finance bro look. I invented it. People, I model for people. I am a personal stylist as well.
I thought of getting a beanie, and Pharaoh told me I shouldn't get
Paul Sweeney dresses way better than I ever could hope to, though. I mean, let's be really clear. He is a handsome devil.
He does that. I mean, he does. He's missed. Is he? Lisa, what did we decide? He has the Gulf Stream. Where did he go?
I don't know. I feel like he's on a
South?
beach with a cocktail
Yeah,
somewhere.
he went south. Probably with Paul.
Choking on that cocktail now, listening to us.
He's there with 20 people, and they all got their cocktails and their umbrellas going, and he's got a can of Budweiser. That's what's really going here. We say good morning out on YouTube and across the nation. Right now, the Bloomberg Business Flash from Interactive Brokers, Lisa Mateo.
Yeah, and we've got futures mix, and this is after U.S. retail sales broadly advanced in December. That was thanks to strong consumer demand during the holiday season. Control group sales, that increased 0.7%. That was the most in 3 months. We also had more bank earnings. Both Bank of America, Morgan Stanley said profit more than doubled last quarter, and that was boosted by Wall Street businesses. We have Morgan Stanley. They're up more than 2% right now. Bank of America, though, seeing a slight dip right now, down about 0.5%. Regional banks, not as strong. U.S. Bancorp, PNC Financial, they gave some muted predictions for net interest income in the first quarter. That was due to slowing loan demand. So now PNC is down about 3%, and U.S. Bancorp down more than 2.5%. Let's get to futures. NASDAQ futures up 0.3%, 67 points. Dow futures down 0.3%, 135 points, and S&P futures up 0.1% or 7 points. The 2-year yield 4.29%. That's up 2 basis points. And the yield on the 10-year, 4.67%, and that's up 1 basis point. We head over to the Bloomberg Dollar Spot Index. That's up 0.2%. Also want to point out shares of chip equipment companies getting a pretty good boost. That's thanks to an upbeat outlook from Taiwan. Semiconductor manufacturing, their shares up 3% in Taiwan. So you have Applied Materials and ASML Holding, their ADRs, both up 4%. That is your Bloomberg Business Flash. Damian and Tom.
And Lisa, thanks so much. We will pull an audible now. The Surveillance Audible, Damian Sassower and Tom Keene. And with us for an extended conversation, Michael Nathanson, definitive on the streaming world, getting through a pandemic, getting through a set of labor issues as well. And now our American entertainment industry confronts a devastating fire in California. We will get to a discussion of Disney and the rest, but we are honored to bring you Michael Nathanson of MoffettNathanson on this horrific moment for Los Angeles. Michael, do you and Craig Moffett have any idea how Hollywood pauses or shuts down or regroups?
Morning, Tom. That is the question, right?
This is something that the industry did not need at this point in time, given what you laid out the past 4 years. I don't know how it regroups, right? I don't know, people have lost lives, homes. I just don't know community. I don't know how they could get back to work anytime soon.
And the Hollywood Reporter, Ingrid Schmidt, and folks, this is a minor story. Top Hollywood stylists are helping fire victims rebuild their wardrobes. I mean, Michael, pull this over to the industry response you would hope for from people like Disney, like as basic as what do they do with the Oscars? What do you and Craig presume they could do?
I know, it's interesting. I was invited to an award show next month, and I assumed it was going to be canceled, right? And when I spoke to the people who were organizing it, they felt like for the community's sake that it has to go on, right? The show must go on, Tom. I think they will try to get people together in a community and regroup and basically not slow down whatever was on the calendar. I really do. Because you basically need to see people get together and figure out what you can do to help your neighbor. So I was surprised to learn that what I was planning to go to was still on. So I have to believe the show will go on, Tom. I really do.
Damian, please.
Well, Michael, I mean, look, you live in Scarsdale. I live in Rye, New York.
Yeah.
We have friends out west, and my question for you, just, and what you're hearing and what you're, what does your gut tell you? I mean, how is LA going to move through this? I mean, do you see migration? Do you see a lot of the wealthy people who are out along the PCH, moving south, moving back to New York even? I mean, talk to us a little bit about what you're hearing.
Well, it's, sadly, one of our partners at MoffettNathanson lives by Brentwood. And they've spent some time down south of LA, and he was suggesting that people will move further south, right?
Yeah.
Away from the canyons and the hills, maybe closer to the beaches. But so to your point, Damien, you've lost Rye, you've lost Scarsdale. It's that type of erosion of a community.
Right.
And I think it's going to take years for this community to rebuild. And I do think you're right. I think if you have the means.
There are no schools. I mean, that's what,
Right.
I mean, people like us, I mean, where do you send your kids to school now? What do you do? How do you
I know.
regrow? It's crazy.
Or church or temple or hospitals.
Right.
It's hard to imagine, but
Right.
I think you will see flight. I do. I think people will pick up and move someplace a little bit safer, maybe even cheaper, right? Given the cost of LA.
Michael Nathanson, thank you for this perspective. And we must thank Rob Carolyn, our Bloomberg meteorologist, who's been sleepless for 4, 5, 6 days. Perhaps this morning, some quiet and containment out in Los Angeles. Michael, I have to admit, on Friday, I will go home. I will commit the surveillance nap. And then I'm going to get up and watch Silo, the last episode of the season for Apple. Tim Cook is so Silo happy he's doing photo things with the actress who's leading it as well. Is Apple making inroads into the Michael Nathanson world?
Tom, I love their content. They're some of the best shows on TV. I haven't watched Silo, I have to admit, but there's a bunch of other things I watch. They're not making a dent, Tom. When you look at overall Apple's share of time spent streaming, do you want to guess what their share of streaming
It's
time
next
is?
to nothing.
It's less than 1%, right?
Wow.
It's I know, it's 1%. And it's just terrible. Yeah. So when we go to LA to do our our visits and tours, there's no one in that town who knows what Apple's long-term plan is and what they want to be when they grow up. It's kind of amazing, right? It really is.
Michael, I'd love to take this in a very different direction. I mean, I want to talk about data centers, and I want to talk about CapEx from the Mag 7 and Mag 8. I heard some very, very interesting figures over the past few days that if you look back over the full year 2024, and you look at the Mag 7 and their spending on data centers, and then you assume that banks are providing, roughly 5-6 times the leverage on that, you take that total, that is pretty much 80% of all CapEx for the country in 2024. I mean, is that right? I mean, is the amount of CapEx that's being spent on data centers, and forgive me, I don't know how much computing power it takes for ChatGPT relative to a Google search. Maybe you can help me understand that. Is this right? I mean, does this make sense to you?
It's a really interesting question. So far, from when we look at Meta and Alphabet, it has made sense because we're in the early phase of the build out, right? And when you look at Meta's results, you can see the benefit of AI in their ad numbers and their engagement. You can see it at Google as well. But we're to your question, we're at this really interesting tipping point where the cost of CapEx, the depreciation of CapEx, I know it's 9 in the morning, but I have to say depreciation at 9 in the morning. The cost of CapEx will start hitting the income statements the next couple of years. And the question will be is, will the advertising revenues, will the subscription revenues from cloud accelerate at the same rate as that CapEx growth, right? That we're entering 25 and 26 will be kind of the test period to see if these investments made sense. To where we are today, it's penciled out, but the full cost of CapEx is barely on the balance sheet today, and barely on the income statement today.
Now, talk to us also about like these data centers. I mean, is there a risk that they become obsolete? I mean, look at Office. I mean, Office is obsolete right now, right? No, tear it down in Class C Office here in real estate. But, I mean, it is a concern. I know that all the they're owned kind of by the Microsoft who in the data center so they can replace them if they do become obsolete. But just the footprints of these data centers and all the money that's being spent in building these huge, huge structures. I mean, is there any risk that, these things go obsolete in the not too distant future?
It's funny. I was thinking that this morning when I thought about how much someone like Elon Musk has just thrown into a quick build of a data center in Tennessee, right? How quickly they've done this. You would think logically over time, just the history of technology, things become more efficient, and lighter, and cheaper, right? And you would think over time these will look a bit, old-fashioned and archaic to have these massive centers housing all these servers. When the speed of change is going to probably produce something much lighter and smaller. I think you're right about that.
Joining us, we thank you for being with us on your commute across the nation and out on YouTube from your home, from your office. Do you know that on a Rivian you can watch us on YouTube in your car?
Really?
I don't know if that's a good thing or not, but that's what somebody told me. Michael Nathanson with us, and we thank him for trenchant comments on the fire, the disaster in Los Angeles, and these comments on the bigger picture as well. Michael Nathanson, what's your single best idea for 2025?
I knew you were going to ask me that, Tom. You ask me that every time.
Besides the Yankees not dropping the ball at the wrong time, what is your single best idea?
Ouch.
Well, how about the Rangers, selling all
We'll
that
get to the Rangers.
Blow it up. Okay. Blow it up. Outside of Shesterkin,
what's your single best idea?
Okay, so basically, my single best idea, and I'm going to punt because the best idea we have at the firm is sports gambling. It's Flutter and FanDuel, right? So my best idea, we've been buyers of Meta and Alphabet for the longest time. Those will still work. They're fine. They're actually not that expensive relative to Apple, which I know you Craig on last week, which is a sell on. So in large cap tech, I'm fine with owning Meta and Alphabet. I mean, it's fine. But the best structural idea will be buying into sports gambling within the U.S.
Okay, so here's what we're going to do, because Damian owns this. We're going to rip up the script here. I'm interviewing Damian Sassower and Michael Nathanson to get to the news here as well. Let me start with Damian Sassower as well. Is gambling out of control in sports because of the addiction that all of us are witnessing each and every day?
Oh, you're asking me a question about
Lisa's
what I think about you're asking me about the morality of sports gambling.
No, I'm asking about it's grown so fast.
Yeah.
That's why Nathanson has a buy on it.
I think Nathanson's right. You haven't even scratched the surface of just how far this can go. But here's my question. I mean, Michael, correct me if I'm wrong. We've expanded. I mean, the footprint of gambling hasn't really expanded so much this year relative to last. I mean, what, Calgary? Calgary got sports gambling this year. Maybe Kentucky, I think, just legalized. Like, when does Florida? When does Texas? When does some of these really big states start to come online here? Is that part of your thesis?
Right. So Robert Fishman and our firm covers the sector. And what he's found is that on a per capita basis, even though New Jersey's been gambling for years in New York, per capita spending keeps going up, right? So you may have thought that everyone you know is gambling and they're spending as much as they can, but we're finding we don't need those states to come online anytime soon because on a state-by-state basis, there's more per capita spending and the competitive dynamic, right? People started with all types of free bet offers. Those platforms have gone away. It's pretty much a two-horse market, FanDuel and DraftKings.
Right.
So it's become a duopoly, and the per capita spend keeps going up. And Tom, I want to let you know, I have deep concerns about this as a parent and as a citizen, but it's legal, Tom.
Right.
And you know what? People said to me, people have spent Thanksgiving Day watching their grown children sit on a couch betting on Thanksgiving football games as a family activity, basically, you know?
I mean, this
That's how
is so important. What have you and your team, Michael Nathanson, learned from England in their decades and almost centuries of really active betting as part of the social culture? I mean, is that where we're heading? We're going to become like, Ira Jersey losing his mortgage on Aston Villa? I mean, is that where we're heading?
Well, it's interesting. The UK has started to put some real guardrails around this topic, right? So the UK regulators are concerned about just how much ease and how much generosity has been given to bettors, and and they've put limits on certain types of bets. So right now we're in this phase where it's just unchecked, right? And I have to think 10 years from now, Tom, we'll look back and say, oh, we should have done more on regulatory, right? But we're in this golden age of letting the market decide how much is enough, right?
All right, Michael, enough is enough here. What happened to the Rangers? I mean, seriously, they're playing a bit better lately, but I mean, they're the third worst record in the Eastern Conference. I mean, outside of Shesterkin, I mean, he's just a force of nature. What is going on with the New York Rangers?
It's interesting. So, as you know, we're analysts of firms, and we have to look at strategies and CEO leadership decisions and culture. And I think this is a story about culture, right? I think the GM and the coach lost the room. And as Tom knows, hockey requires intensity and dedication and throwing your body on the ice to block shots, right? And I think they lost the room. Yeah. And by trading their captain and getting rid of Goodrow and then getting rid of Kakko, they basically... I think they lost momentum. I really think it's that simple. I really do.
Okay, I got 1 minute, Michael Nathanson. Yes. I think I've got this right as a foreigner. The Jets are terrible. The Giants are terrible. The Islanders are terrible. The Rangers are terrible. The Nets lost their worst game since time began last night. What is it about New York sports that makes it so damn bad?
Tom, as a New Englander, I think it comes down to acknowledgement of ownership, right? Like, what did the Crafts do? What did the Boston Red Sox ownership group do?
I mean, he's never coming on again.
I think it comes down to ownership, and we have some terrible owners in New York. I wish we could have shareholder activism to replace all these folks. I really
Michael, I just want to tell you, I'm going to feature your comments on gambling and betting today on Single Best Idea, the podcast. Thank you for the comments on this horror in Los Angeles. Thank you for your comments of what Lisa and I are worried about with our kids in gambling. Mr. Nathanson owns the high ground with MoffettNathanson. Red and green on the screen right now with our news in New York City, Michael Barr.
Thank you very much, Tom, Damian, Lisa. Israeli Prime Minister Benjamin Netanyahu accuses Hamas of reneging on parts of a ceasefire agreement, risking the deal's completion. The Israeli cabinet will not convene to approve the deal until the mediators confirm Hamas has accepted all elements of the agreement. Netanyahu signaled there were issues with the deal shortly after President Joe Biden and key mediator Qatar announced it was complete. White House National Security Communications Advisor John Kirby says it was a joint effort between Biden's team and the incoming administration.
Comments by President-elect Trump, particularly his support for this deal and making it public that he supported this deal, did send a strong signal to everybody in the region, including Hamas, and it certainly, I think, sent a strong signal to the hostage families and the hostages themselves.
John Kirby on ABC's Good Morning America. Search crews have moved into some burned-out neighborhoods in the Los Angeles area, even as efforts continue to contain multiple wildfires. In Altadena, Mike Liam, assistant director at the Los Angeles County Sheriff's Department, said teams are looking for hazards and fire victims.
We would prefer that people heed the warnings and evacuate when they are told to. But, sometimes people decide to stay. Unfortunately, many times, that was a fatal mistake.
At least 25 people have died from the fires. It is the latest in the feud between rappers Drake and Kendrick Lamar. Drake has filed a new lawsuit against his parent label, Universal Music Group, accusing them of promoting a song that put his life and livelihood in immediate danger. In the complaint, Drake detailed multiple violent incidents at his home in Toronto last spring. That's after Universal released Kendrick Lamar's diss track, Not Like Us.
They not like us.
They not like us. They not like us.
Universal Music saying in a statement the notion that we would seek to harm the reputation of any artist, let alone Drake, is illogical. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, Lisa.
Hey, Michael Barr, got to get this in with you. I got 30 seconds is all. The betting discussion with Michael Nathanson. What do you see? I mean, is it just out of control?
Well, I'm not going to lie. I heard gambling, and I like hearing the ice cream truck. I ran in the studio. But yes, the answer is yes, especially with young people. You know, if you put $5 or $10 on a game or something like that, yes, of course, you'll lose it. But okay, it's fine. It's when you start getting into these $1,000 bets and beyond. Come on, use some sense, people. Right. It's you're taking away what the fun is supposed to be.
I think it's the in-game betting. It's the in-game betting. Yep. I mean, if you can't watch a game anymore, if you're watching with other people, they're betting in game, and then you feel you need to bet in game. It's crazy.
We got to leave it there. Thank you so much. Great discussion. Thank you for the response out on YouTube on that. Greatly appreciated. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the average U.S. temperature in January 2025 be greater than 34 degrees? Well, you can trade your prediction at Interactive Brokers. Buy yes if you agree, no if you don't. Correct answers earn $1. Go to IBKR.com/forecast. All right, we've got futures mixed, and this is as the latest economic data keeps Fed rate cuts, keeps those bets alive. We'll start with NASDAQ futures. So they're up about 0.4%, 93 points. Dow futures down 0.1%, 47 points. And S&P futures up 0.1% or 11 points. We have the 2-year yield at 4.29%, up 2 basis points. The yield on the 10-year 4.65%, and that is little changed. We head over to Brent crude, $81 a barrel. WTI crude, $79 a barrel. We have spot gold at $2,716 an ounce. And the Bloomberg Dollar Spot Index up about 0.2%, with Bitcoin just above 99,000. Shares of Target, they were changing. They were higher. Now they're lower, down more than 1%, and that's despite positive holiday sales. Then we go to shares of United Health Group, down more than 2%. Fourth quarter profit topped estimates, but high healthcare costs in the fourth quarter, that forced it to leave its 2025 guidance unchanged. And finally, some news from DuPont. The company says it's no longer going to spin off its water division, changing plans to break it up into 3 smaller publicly traded companies. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Damian and Tom.
Lisa, thanks so much. Greatly appreciate that. What we're going to do is get the markets open here in about 4.5 minutes. And the reality, folks, is when Paul's away, we have to bribe people to come in. Nobody really wants to do the show. So I said to Damian, Wiseman's going to show up. Dr. Wiseman's going to be here. That's the only reason Damian's here. Damian Sassower with Terry Wiseman of Macquarie.
Well, Terry, I've been sunning myself in Miami for the past few days, so I've really not been paying attention to markets. But one thing that did catch my eye is the fact that the Bank of Indonesia, the Central Bank of Indonesia, actually cut rates by 25 bips here in the face of, a Fed that's going to be higher for longer. And as we know, all central banks follow the Fed. Their currency is now the worst performing in the world. Talk to us about what this means for for monetary stimulus from central banks outside of the U.S. Can they fight the Fed here?
Yeah, I do think they can fight the Fed. I think there's other considerations with respect to whether fixed income markets and currency markets and some of these emerging market economies will be held up besides what the Fed does. Okay? We've seen, for example, that in the U.S., fiscal considerations are important. I suspect they have become much more important in the emerging markets. And for those economies that I think have gotten debt sustainability right and deficits right, they're going to be in a better position to ease in the event that, even in the event that other central banks might be tightening in view of the need to avoid giving the impression that they've become fiscally captured. So there is a discrepancy here, there is divergence. We've seen some emerging market central banks raise rates recently, in part because of fiscal concerns, like Brazil.
Right.
We've also seen some central banks cut rates. Colombia, Indonesia, as you mentioned, Mexico, for example, still cutting rates.
Well, I mean, Terry, let's talk about Macquarie. You're in Southeast Asia there. You're Antipodean, but, you're very close to what's going on in Asia. And, I look at the Asian bloc here, and I look at the low yielders. I look at China, I look at South Korea, and I look at Taiwan, and I look at China continuing to allow its currency to depreciate. And what does that mean for the Asian bloc? What does that mean for Australia and the Australian dollar?
It's terrible for the Australian dollar. If we do get a situation where the PBOC and the monetary authorities in China feel or believe that the only way that they can sustain manufacturing growth in 2025 in view of the tariffs and in view of the fact that they have a weak economy because poor retail sales from the households and a poor property sector, they're going to let this currency go. We think dollar yuan can get to 7.5. And in that context...
7.5, yeah.
And in that context, the Aussie dollar will almost certainly be below 60 cents. That's our view. It's been our view for a while that the Chinese are going to allow the dollar's yuan to go up. It has not been our view until recently that Aussie will be susceptible to that, but now it is.
That's a huge statement. We're going to get the market open here in the United States, but I just got to say that we're going to come right back off the market open and revisit this. This is really important.
Very much.
The history of China here, folks, is a vastly appreciating yuan within the modern experiment with yuan on Bloomberg. I can go back 30 years instantly, and you've got controlled stability out to a day which I recall vaguely in 2005, and then down we go with renminbi strength, and it's just given way, and to go to 7.50 from 7.33 right now, a weaker yuan, that would be something. And we'll expand on that with Damian Sassower and Dr. Wiseman here in a moment. We say good morning on your commute across the nation, and of course at your office, at home. The efficacy, I learned that word from Sarah Eisen. I love that word. Sarah Eisen taught me that word. The efficacy of YouTube. Subscribe to Bloomberg Podcast out on YouTube, where you can listen in to the applause as Lisa Mateo enters the room. Lisa Mateo with the opening bell. What do you have this morning,
That
Lisa?
is my theme song. Good morning. Yeah, and this is after we've had some more economic data today, so it's going to be interesting to see how it all plays out. So let's start with the S&P 500 as we get things started. It's up about 0.2%, 12 points, 5,962. The Dow, that is little change right now, keeps going back and forth right now, down about maybe 8 points, 43,210. And the NASDAQ up about 0.3%, 66 points at 19,573. We're moving on to the 2-year yield, 4.29%. That's up 3 basis points. And the yield on the 10-year, 4.66%. That's up 1 basis point. We have Brent crude $81 a barrel, WTI crude $79 a barrel, and we have the Bloomberg Dollar Spot Index up about 0.2%. With big banks, have to check in with Morgan Stanley up more than 1.5%, and we have Bank of America is little changed right now. That is your Bloomberg opening bell report.
Lisa, thanks so much. We talk yuan depreciation. Damian Sassower with Terry Weissman of Macquarie.
Terry Weissman, we know that Carrie has done much of the heavy lifting in global FX over the better part of not just the last year, the last 3 years, yeah? And I'm looking here at rate differentials with the U.S. and the rest of the world, and I'm just going to give our audience a little bit of color here. Rate differentials are at all-time record lows in China, Thailand, and South Korea. I'm talking 10-year spreads. In India and Malaysia, they're at levels we haven't seen since the early 2000s. In Chile and Peru, they're at multi-year lows. Terry, in a world where Carrie is basically driving FX performance, what are your expectations here? I mean, can investors even think to reach into their pockets, take their dollars and move them abroad? I mean, what's going to incentivize them to do that?
Yeah, I would agree that there certainly is not that much of incentive these days to earn the carry in local currency markets and the emerging markets, in part because the carry is de minimis. It's going to take, as I mentioned, other things to get investors to invest in these foreign markets. It may have to simply be as simple as having a U.S. slowdown, and in that case, what we might see is, the theme of American exceptionalism starts to fade, and people start to look for other markets to invest in. Could they go to the emerging markets? Certainly, I don't necessarily think that would be the first stop.
Right.
I think they would go to Europe first. They might go to Canada first, where we're starting to see some positive political changes conceivably. But eventually that money might find its way into the emerging markets. I think it's contingent also not just on the prospects of a U.S. slowdown that causes asset reallocation, but like I said before, we do need to see much more coherent policy coming out of the emerging markets with respect to the fiscal. That's the thing that's going to allow the risk premium to fall further, but this is not something that's going to deter flows. If anything, it's going to encourage flows.
You have lived crisis. For beginnings, just talk about Bear Stearns. I read cover to cover, I can't believe it's 20 years ago plus, Stan Fisher, IMF Essays from a Time of Crisis. Everybody walked around with it. It was a little red book from Stanley Fisher. How close are we to those crises that Professor Fisher wrote about on his IMF watch?
Look, central banks have become much more attuned to the possibility of crises in the last
They can monitor leverage
years.
now much better than they did then.
Not only can they monitor it, but they realize just how important it has become for determination of the business cycle, not just in individual countries, but globally in view of the cross-border shocks that we saw in the global financial crisis. I think because they're monitoring that situation much more closely, and because they understand that only monetary policy can come to bring the weaponry to bear in fighting these crises, or at least trying to bolster confidence, as we did see effectively in the global financial crisis. I think the chances of those kind of multi-country crises are much lower now than they were before. But again, that's because policymakers have become a little bit more attuned, more astute with regard to what it takes to avoid these crises. When it comes to crises that come from outside the financial sector, another COVID crisis, for example, another 9/11, well, then all bets are off, obviously.
Well, this has been great. The usual conversation with the brilliant Terry Weissman, and made better by Damian Sassower's comments there on China. Damian, what does your world do if we get to a 750 yuan? Do you have to extend your work week to 30 hours?
It's not so far from here, Tom. And look, I think the markets are kind of
30-hour work week?
No, I think Terry's spot on. I think, it's going to be a race to the low. All these other Asian currencies are competing against the yuan, and they're going to depreciate as well. So it's a zero-sum game.
We continue. Damian Sassower in today for David Gurrow. It's good to see as well. Get green on the screen. The VIX under 16, 15.91. We are out on YouTube. Subscribe to Bloomberg Podcast. Great live chat out there as well. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks little changed after more data. Retail sales rose 0.4% in December. That was compared to economists' forecasts of 0.6%. And Americans, they filed 217,000 unemployment claims in the latest week. That was slightly above what was expected. We have the Nasdaq up 0.1%, 35 points. The Dow little changed, up 13. The S&P 500 up 0.1% or 11 points. The 2-year yield at 4.29%, up 2 basis points. And we have the yield on the 10-year, 4.67%, and that's up 1 basis point. The Bloomberg Dollar Spot Index up 0.2%. Technology companies seeing a pretty good boost. This is after a strong outlook from chipmaker Taiwan Semiconductor Manufacturing, which is up more than 3% in Taiwan. You have NVIDIA up more than 1.5%. Supermicro Computer, they are up this morning as well, up nearly 2%. Then European shares on the rise. That was thanks to a jump in jewelry sales. Luxury goods maker Richemont, their shares up 15%. And that's that's also causing more for Dior Paris up 7%, Kering in Paris up 5%, LVMH up 7%. And since we're talking luxury, and Tom, I'm going to need your help with pronunciation in French. Luxury train travel booming. Bloomberg Pursuits, they put this list out, the top trains you need to take. Coming first is a ride in Les Aubervilles-sur-Toit. No?
Nailed it. Absolutely nailed it.
Yes. Okay. It's a 2-person suite. It's going to cost you $101,000 a night when it begins in March.
Yeah, Mrs. Keene looked at that. I said, mais non. Lisa Mateo, thank you so much. Greatly appreciate that. Angelina Raskoway from Paris, scheduled to be with us here in about 15 minutes. Gregory Zuckerman holds court over at the Wall Street Journal. Emma Moody of Bloomberg told me he's better than good. He's written some really good books. He has a tweet of the day. David Tepper, David Einhorn, and Alan Howard are 3 of the most successful investors of their generation. Their key funds gained 8%, 7.2%, and 4.7% last year. Makes you feel better about your year, right? To put that in perspective, there was some double-digit excellence, SPX up, the Mag 7 and the balance in that, and some leading growth funds up 25, 30, even more % per year. Damian Sassower, what in God's name is going on? I adore these people. David Tepper's been very kind to me. How do these fancy people underperform and keep the assets?
Oh, God. Well, look, first things first. They're very good at what they do. I'm from Millennium to Viking to the Tiger Cubs to Cotu to Cerberus to Davis and Kepner, on and on and on. Sophisticated, investors with, deep infrastructures, and they have a structural arbitrage in terms of not just processing information more quickly than their peers, but, acting upon it, Tom. And so, look, here's the numbers I'm seeing. The HFRI Fund-Weighted Composite Index for the year 2024 up 9%. That is not a bad year for hedge funds. So it seems like guys are making money.
Why is that not a bad year for hedge funds if Lisa Mateo's got her entire 201k
up 22% just buying the NASDAQ, buying the NAG 7? No, I'll tell you why, because you're not just buying the Mag 7, Tom. You're if you're doing a 60-40 or some sort of right bonds and stocks. Bonds were down 1% last year, right? So if you even it all out, you're kind of up around there, yeah. So look, I think at the end of the day, it's more about the volatility year over year, which kind of differentiates hedge funds from their peers. The fact that, look, when you do have a good year, you're going to have a pretty good year, but when you have a bad year, it's not going to be nearly as bad. So you've got the asymmetric risk reward, that upside, and I think that's what investors are buying.
The last time you were on, always a class act that you've been for years, including your tour of duty on Wall Street, you said it was a really tough year, within EM and with currencies and gaming it all. In what way was it tough?
So for me, it's about funding, right? When you're a hedge fund, so when you're a hedge fund, you're not just going in one direction, you're going in both directions. So in order to go in the other direction, you have to fund it by going short. You have to find banks and willing lenders that are going to give you the ability to put that exposure on. And usually, Tom, that's very expensive to do. In this environment where yields are going up or cap rates, all this stuff, everything gets more expensive to put on, foreign exchange hedges, rate hedges, equity hedges. It should, in theory, be more expensive, but the reality is it's getting cheaper. Realized vol has been coming off here, Tom. So from an FX investor standpoint, it's cheap to put on FX hedges. It's cheap to put on dollar protection. And the same thing goes for a lot of other asset classes with spreads at all-time heights, with equity vol trading at all-time lows. And I think this is where hedge funds can really lean in and where performance can shine.
So to go to Taleb 101, is it, as Nassim Taleb would say, all that's fine, but you deploy small amounts of bet rather than betting the farm on the Indonesia, whatever it is.
Well, position sizing is everything, all right? And you hear about these hedge funds, how they put up the gates, they're not taking in any more money, they just can't deploy it, they can't put it to work. But then I hear this, excess point. I hear other people are in the market trying to raise money, So I can't really kind of comment on that. But position sizing is everything. Getting that right is the key to performance.
Folks, this phrase position sizing, you don't hear it too much from us, but to me, it is absolute gospel. It is the most, I call it in speeches, the how much-ofness of it. For example, the how much-ofness of what the Bills need to do to beat the Ravens this weekend. Red and green on the screen, the VIX 16.07 with our news in New York City. M. Barr.
Thank you very much, Tom, Damian, Lisa. Prime Minister Benjamin Netanyahu says that a last-minute crisis with Hamas was holding up Israeli approval of a long-awaited ceasefire that would pause the fighting in the Gaza Strip and release dozens of hostages. Netanyahu signaled there were issues with the deal shortly after President Biden and key mediator Qatar announced it was complete. White House National Security Communications Advisor John Kirby.
Hamas is in a much weaker position now than they were in May when this deal got put on the table. They're also more isolated with the ceasefire with Israel and Hezbollah. They can't count on Hezbollah coming to their aid. Iran is much weaker. So there's been a lot of developments that have put Hamas in a situation where they were more desperate to get to a deal.
John Kirby spoke on ABC's Good Morning America. More of President-elect Trump's picks to fill his cabinet go before the Senate confirmation hearing today. Yesterday, Trump's pick to be Attorney General Pam Bondi vowed that she plans to keep the Justice Department independent from the White House during her tenure. However, when asked by Democratic Senator Sheldon Whitehouse, she would not rule out investigating the president-elect's adversaries.
And I'm questioning you right now about whether you will enforce an enemies list that he announced publicly on television.
Oh, Senator, I'm sorry. There will never be an enemies list within the Department of Justice.
Meanwhile, Trump has repeatedly expressed interest in either buying Greenland from Denmark or taking it by force. His pick to be Secretary of State, Senator Marco Rubio, says Greenland's importance relates to not only having a presence, but controlling the shipping channels.
I think now we have the opportunity to see it for what it is, and that is, one, if not the most important, one of the most critical parts of the world over the next 50 to 100 years will be whether there's going to be freedom of navigation in the Arctic and what that will mean for global trade and commerce.
Scott Bessent, Trump's nominee for Treasury Secretary, will be before the confirmation hearing today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, Lisa.
We had a wonderful conversation with Michael Nathanson on betting. We'll feature that through the next couple of days. Really, really something. Do you bet on the Chiefs? Are the Kansas City Chiefs so unpredictable you just know you're going to lose money?
What, the problem is they have their tops in the AFC. I mean, they got the bye.
The fact is the facts are what they are.
Yeah, I mean, but see, we talked about this earlier this morning. I think the winner of the Buffalo-Ravens game, that's going to be the AFC champ because I think either Buffalo or Baltimore could run the table with Kansas City.
Yeah, I mean, I kind of have to. I have to agree with you only because I can't watch the Chiefs do it all over again.
Why?
So, I mean, it's
why
just,
do you not? I hear this from so many people.
I mean, and the refs give them every game.
What's her name? Taylor, is she still there?
Well, I mean, look, I'm a big fan of Travis Kelce. I'm a big fan of the Chiefs. I really am. But Andy Reid, they win every year. It's like, come on, pass the buck already. You know, I'd love to see Josh Allen. I'd love to see Lamar Jackson up there. Yes. But their defense needs to step it up here, and they've been a little.
Is it dumb question? Is it harder to not lose money in college football or NFL football?
It's harder not to lose money in the NFL. In fact, because some of the betting houses are saying
they lost money.
They blame the Lions because we were winning all over the place and they lost money.
I don't know. I mean, it's hard to kind of measure it.
But Damian's speechless because he hasn't lost money this year.
Well, yeah. No, look, I mean, the truth of the matter is, I don't gamble because I've lost so much money doing it. So, I mean, I just feel it's. Look, I mean, college football. I mean, I think that really has been such a money generator for FanDuel, for DraftKings, and so, I mean, I there's got to be something there. People have to be making money there if they keep doing it. Maybe I'm wrong.
I am so old-fashioned on this. I see the banners in college football with the betting numbers underneath. That are like Greek to me.
Yeah.
I'm offended.
Yeah.
Why are we betting against Ohio State? I just don't get it. Thanks for that great conversation, and we'll do it again after the Lions win. Red on the screen right now. Stay with us. Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Sometimes there are surprises out there. We're going to get right to it. If you stagger out of 24, Rue Saint-Honoré in Paris, across the street at D7 is Cartier. They just killed it today. This is a shock across all of the Pacific Rim, across Richemont, Switzerland. Joining us from Paris now, Angelina Rasquet, who writes this up for Bloomberg each and every day. Did you see this coming, Angelina, or was this a surprise?
That was a very positive surprise. The market, we're not expecting this, so hence the reaction. I mean, Richemont today hit a record high, and it lifted all the sector. LVMH at some point was up by 8%, but basically, yes, incredibly strong results, especially for their jewelry brands, which include Cartier, Van Cleef. They were up 14%, which was double what the estimates were.
Alex Steele's in the studio getting ready for the next couple hours, and she's nodding her head on the Van Cleef. Angelina, was this because of an American pop, or was this a Pacific Rim shock, China doing better?
China is still actually a big drag. It was down 18% in the quarter. But overall, Asia Pacific was actually down less than expected, so a slight improvement. But yeah, as you say, the big driver was definitely the US. The Americas up 22% and Europe up 19%. In Europe, there's a lot of the tourism factor. In the US, we suspect that once the uncertainty of the US election was out of the way, then that's when consumers start spending again. It also coincided with the holiday festive season when people buy gifts, basically.
Angelina, seasonally speaking, the final quarter of the year is typically the most important period for luxury labels because of holiday shopping. So talk to us about the read-through to LVMH. They're reporting, I think, at the end of this month. I mean, what can we expect?
Absolutely. I mean, Richemont was today the first big test. We had Brunello Cucinelli earlier this week.
Brunello Cucinelli. Exactly. Cashmere hoodies.
Very exclusive brand. LVMH will report at the end of the month. LVMH is more exposed to what we call the soft luxury, so handbags. Yeah. So we'll see if handbags do as well as jewelry, as hard luxury.
Yeah, Angelina, you crushed it last year with that lengthy article on the Arnault family. Is it like Succession on American TV? What does 2025 say for the Arnault clan?
That's a very interesting question. I mean, Bernard Arnault is still very much in charge of the conglomerate. His 5 children all work inside the company. They all have important jobs. What we see is that every few months we see a new role. One of his children take up a new role, and actually in February, his third child, Alexandre, is coming back. He's come back to France, and he's going to be the number 2. At the Wine and Spirits division, Moët Hennessy.
Yeah, Angelina, I got time for one more question. Alex Steele wants to know, how can you fix the value-added tax line at CDG? It's a bunch of American idiots lined up for 2 hours to pay the value-added tax. Why can't Macron and Angelina Rasquet fix that?
I mean, that's a big question for tourists. Of course, you want to make it as seamless as possible as an experience. So I guess, they'll have to work on it.
I guess they will. That's your responsibility. Angelina, thank you so much for joining us.
Thank you.
From our Paris News Bureau. It's by the Opera House. Life is tough.
I mean,
Serafino rolls out for a 3-hour lunch. It's life is tough at our Paris bureau.
I can tell you the lines in Lisbon and Barca weren't so long for the VAT tax. It seems like Paris has a little bit of an idiosyncratic thing going on there.
It's huge. The American retail impact in Paris. I don't know what to make of it. It's absolutely. Alex Steele's not
swinging around the Champs-Élysées
there as well. Yeah, she knows. Thank you, Angelina, on short notice there as well. Damian, thank you so much. Are you with me
Thanks for having me. I am.
Are you with me
They're
tomorrow?
letting me back.
That's too much.
Letting us play again. I can get back in the sandbox.
Outstanding. What are we doing? We're keeping Damian happy, tanned and rested in Miami. We play things out of Criteria Studios. It goes back to James Brown.
Can't do no wrong, and when I hold you in arms, my love won't do you no harm, and I feel nice, that sugar and spice. I feel nice, like sugar and spice.